Hello, 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 everybody. Give me a second here while I load up everything. Setting up these live streams is not the easiest. So I'm gonna show you some interesting things right now. Let's see if everything can be uh, loaded up. Not quite there on the screen on what I want to set up here, but I think we're live now. So yes, I'm gonna show you some. I can hear myself. Can you imagine that? Okay, so let's get started here. Uh, we are now going to go over quite a bit of interesting stuff. This is another random stream I'm doing. Um, this is just setting up a technical with screens and blah blah blah. I'm hoping my audio levels now better than what it's been for prior to. And what happened last night? Let me just show you my screen here. That helps, doesn't it? Okay. So what I did last night is I put up a stream that had to go in a private mode. Reason being is I think I crossed the lines with some of my option trading talk. So out of that, here's my page here. Out of that, what happened was I started talking about things that might have crossed the lines with a few providers that I use. Give me a thumbs up. Give me a +1 or a 1 that you can hear me fine. The audio levels are good. I would appreciate that. And let me know where you're coming in from. Hey there, audio's good. Thank you. If anybody else can verify that, appreciate that because I was overdubbing over the last stream. So yesterday, what happened was, let me see if I can find the article. Anyways, it doesn't matter. Okay, so today what we're going to do is I'm going to go into really big detail using AI, using these dynamically created bots, trading bots in Python. I'm going to go through the same process and I'm going to show you essentially why you do not need your coding is not the priority. If you want to do long-term trading to change your life, if you're going to go in a career, and as I said last night, there are systematic portfolio managers earning anywhere from a few million up to $50 million once you get into the upper lead head of like a CIO or a portfolio manager that manages portfolio managers, and those compensation packages can get up to 50 million pounds out of the UK that I verified, and that's all because of AI. So let me show you what we've got here. So I'm using VS Code, and I've shown this project before. I've just ran a pile of news. So this is the standard um, a folder, and I'm on obviously Windows here. This is what it looks like. So we can generate three different reports, some HTML files, some JavaScript, and right here um, is the Python trading bots. Okay, so I'll show you those first. So we generate the news, the latest batch. We could deploy these tonight, but I'm going to probably rerun this to get a fresher set of trading bots. I've talked about potential profit, meaning I've got a gold strategy that looks really good. In fact, I'll say it's perfect. Okay. And as I'll also mention that Ethereum Bitcoin looks good. And I have a very promising uh, euro strategy as well. So let me show you the bot plan that I just generated. Now I just put this out to all my folks on an email list. So these are the type of bots we're dealing with here. I'm just flipping between two screens here. Okay, so this is what the bot plan looks like. So we and I actually can show you this in a spreadsheet form. Uh, this is really important. I focus on futures and options. Okay, right now because my account's really small, I'm focusing only on futures. I think once you want to go into options, you're probably going to have to double your required costs. So this is it. This is a spreadsheet I don't really deploy anywhere, post anywhere. But in this latest batch of news and the bots, we're dealing with potentially starting capital of 288,000. I do realize many people don't have that kind of funds. There are a few. The majority don't have that. When you trade futures, you're going to have a margin cost. So this calculates at around 240,000 for all the bots I'm about to show you. Total commission round trip costs, $200. And this is the average expected Sharpe ratio at 2, which is very strong. Average win rate of 59%, which is very strong. And what are we looking at? So this is the potential portfolio among these generated bots. So what we're looking at is we're involving SOFR, which is a overnight rate interest rate. We also have natural gas. We've got copper versus lithium, a mini S&P 500 versus the Russell, because that's been taken off over the last week or so. And then we got 10-year, 2-year treasury, Bitcoin versus the CME versus the Binance. So that's really the spot market I've talked about yesterday with the basis and classic arbitrage. Then we have this one I think is going to be very lucrative, similar to what I'm already testing and probably going to live trade with hopefully this week. Ethereum Bitcoin futures ratio. We have the gold versus Bitcoin, and then a DXY versus the Euro stocks. So I'll show you the reports in detail why that comes up a lot. And this is going to be a long stream. The last one from last night was 2 hours. Okay, hopefully you can go through that. And then Ultra Bond on a 10-year treasury. These are the number of contracts you need for each. These are assuming full size contract. So this is the starting capital, expected return. So let's say with gold, uh, where's our gold? We don't have a pure gold, or do we? No. So this one right here, gold, uh, Bitcoin macro hedging, $18,000 starting capital, 4 to 16,000. So some of these will actually double over a period of time. That's the expected return. Okay. So here's the costs. And I've talked about these before. These are margin costs. These are commission, so on and so forth. So the total is 238. Okay, and the margin per contract, total margin, total round trip, which is very low compared to like the mainstream brokers out there, and then of course the assets, and then these are the risk matrix. So this is the ultimate as a portfolio manager. What we're looking at. Um, oh, I'm sorry. I'm looking at myself here, and you're not seeing what I want you to see here. I apologize. I have no idea why this is not happening here. Oh no. Yeah, sorry. I'm on a phone. So the full screen folks people should see exactly what I want to show here. This is the important nitty-gritty stuff right here. This is portfolio manager stuff. This is risk metric stuff, and this is what generates. If you consistently generate profit in a firm, this is what gets you into the $1 million packages. You're not coding, you're not doing quant analysis or research. You're on top of the bosses that run the quant teams and the quant trading desks. So what they're looking for is essentially, obviously, the annual return. Sharp ratio is the other big metric, but this is the big one, the max drawdown percentage. So what we're looking at is risk reward. So you have to ask yourself, anything Bitcoin, you're going to have a very high drawdown at 25%. Depending upon your risk tolerance, anything over 15% drawdown max is usually not what you want. Okay, because those are negative whipsaws can scare a lot of investors in a firm or clientele. So they don't like to see that. So a lot of portfolio managers will stay away from that. So essentially anything under 15 is good. And then they'll do a comparison with the Sharpe ratio. Um, so this one right here, surprisingly, on this 2-year treasury, 2.5 Sharpe, but with a drawdown of 20, that's pretty high risk. So let's see, you have here a good one, Brent WTI spread widening. That's because of the Iran war versus WTI, Western Texas, so oil produced in the States. So right here we have a sharp ratio of 2.1, and I'm sure a lot of you know when you're over 2.1, you're doing pretty good. And the drawdown is just right at the tolerance, okay, at the threshold of 5.5. Okay, there's this other one right here, 2.3, okay, natural gas, but that one, like, would you be willing to take on a 18% max drawdown? Okay, and then you get into the more higher level risk. As you can see here with the drawdown at 20% might be a little high. So this is one of those fancy games you got to play. DXY versus Euro stocks, two sharp, less risky, max drawdown at 14%. So these are sort of the things that a lot of portfolio managers will look for. Okay, so the energy ones look pretty good as the top trading. Brent, WTI spread, natural gas, probably their best ones right there. So that's generally what these multi-million dollar paid risk managers are looking for. Okay, those are the top things. All right, so let me show you some other things I've not shown before, to be truthful. So here we have some PDF files, we have HTML files. Now, just so you know, I can't post HTML or Microsoft Excel files on my groups because it's, I guess they call it a security concern on my hosting provider. So I can't post those, but I do generate PDF equivalent. They're just not as convenient to work with. But anyways, so these two right here, this one is the analysis of the proposed portfolio I just showed you. So we have 11 trading bots. Okay. These are them. And then we get it back into the what I just showed you in the spreadsheet form. But there's some visuals that you might be interested. So right here's what we're looking at. So let's say we're starting at 288,000, projected 71% win ratio, projected sharp, and that's across the entire portfolio, across all trading bots. Okay. So here's your projected sharp win ratio right here. I'm sorry, 71% annual return. Okay, that's what's expected, and that's with a 59% win ratio as well. Now, if you really want to, really want to maximize this, what you do is you get rid of your top, or you get rid of all the portfolios that are dogging the entire portfolio. So you have, let's say, the top one or two, maybe the top three performers, and you'll boost this return, and you'll basically boost all your returns. Okay, I do that with simulations. As I unleash these bots into a simulated environment and trading against real market data. Okay, so here is the capital allocation right here. Um, as I said before, for live last, call it 2 weeks, the best performers have been gold, Ethereum, oddly, and Euro potentially. Those are the top three. So that's what I'm going to mostly focus on. Now, this can change. Obviously, now this is all brand new to me. But as the equity markets start to prove themselves, what potential could come out of that is those instruments may start to lead as well and be top performers. I'm talking about ES, NASDAQ, or S&P 500, and Russell. Okay. And potentially one of the European one as well of stocks. Okay. So again, here, annual return on which bot or strategy will give us the highest annual return. That's expected. Okay. And of course, it's never going to ever be like that. And then the margin requirement, and I've said before, it's quite odd that I find that Ethereum's the highest margin to run these as well. And again, these are all in my world right now only for CME exchanges, okay, Chicago Mercantile Exchanges. So here we have another projected portfolio with the visual. And again, I always got to tell you, that I put red alerts on this. Educational purposes only, not investment advice. Verify or seek with professionals if it's needed. Okay, because this is high risk stuff. And what I'm really focusing on is futures today. This is the condensed version uh, of what I'm trying to do here because this is what got me potentially into trouble yesterday. I can gladly talk about it and I'll show you the deep research reports that I can do. Right here, these option chain reports, this one, and there's a few other ones, and these are JavaScript. Um, this is where I really can't go into detail with, but I will tell you I have now the technology in place. Uh, I do have the technology in place uh, to basically, you know, focus on options. 80% of this stuff is done in options. When you look at the $1 billion plus firms, most of their returns are going to be from options, okay, in the CME or whatever futures exchange out there. And then they're going to use futures as a way to minimize their downside risk. Okay, as I said, last night I have a whole course on that. If people are interested, very deep, very analytical, a lot of times invested in this, but if you're willing to go down this path, I think you'll reap a lot of reward from it, career-wise or for yourself. And I'm going to show you the professional reports and what the smart money looks at. We don't want to become part of, I'll call it, as everybody knows, call it the dumb money. What we're wanting to get into is the mindset of how these firms trade. Okay. That's very important because it's the big firms that will impact everything the retail trading crowd tries to trade off of technical analysis just via charts, which is the dumb money, obviously. What we're looking at is future movements and how these big firms position those, and then they use the retail trading crowd, the dumb money, as the liquidity for their exits. And then who's left holding that bag? Usually, it's going to be the retail trading crowd. That's why you get a high percentage of the trading crowd lose a lot of money. Okay, about what 90%. And as the markets are much higher volatile now, a lot more unpredictability, traders are dropping out. As I said before, I read an article in the last week, 3.5 million have dropped out as well. So right now, if you have questions, let me know, comments, because I'm here to serve you. I know you want to learn, but I'm just showing you the snapshot of what this whole thing it's seeing right now with dynamically traded bots, along with the actual strategies. The source code, and the bots themselves are so secondary. It's like it's the lower priority because now with AI, we're able to generate a lot of these bots for us. And as I said before, I've got a course that focuses on that as well for a lot of people that might be interested in getting to algorithmic trading, but doing it in a smart way and using AI as the driver um, to build up the skill sets they need for both interviews, recruiting process, for themselves. And as I say, getting into that mindset with the AI now, it's so powerful. You can do a lot. You may spend a bit of money, and as I keep saying, people don't want to spend that amount of money, which is fine. And as I said yesterday or last night, one in the stream, I said, if you were to bill yourself out on an hourly basis as a programmer, $100 an hour, so that's 2 hours of work, and you factor in the amount of work you can get and output you can get from AI, it's going to be probably up to 100 times the return on what it's produced and the output of it, the results. Okay, so let me go back to the screen. If you have any comments, questions, let me know. Okay, so I'm going to take you over to the VS Code here. I think is important to understand here, as I said, there's a lot of people out there that um, will focus on the code. So this right here is examples of the dynamically traded uh, bots. Let me show you one. I don't know. Let's do this one. No, let's do this one. This is going to be the one that everyone wants to know about. So here it generates the logs. Okay, so you can see them. Okay, over here you can do the ES, which is the S&P 500 symbol, and RTY, which is the Russell. So this is the relative value arbitrage. You can see here, this is generated courtesy of our Claude code. Now, when it comes to Claude code, a lot of people will want to use Claude code, the CLI, the client command line interface, I guess. No, I would probably go with the VS code extension. Okay, I'm just getting into a little tech here on the AI front. You can use OpenAI has one, the Windsurf. Maybe that's what they use. There's also a Cursor, and what's the other one? Google Gemini, or no, sorry, Anti-Gravity, which is all the Gemini models. I find that the Claude code's the best at code generation, and the Claude code is very good for that. In here, you'll see the models that I've used is Haiku. Okay, with Haiku, um, you have the other tiers that are generally Sonnet and Opus, which are way more expensive. So Haiku can do this quite nicely at a way more affordable cost. Okay, just so you know. So we're able to generate all these bots here. There's about what 11 of them, 12 of them. They're dynamically running, able to run. Sometimes I go into the AI here as examples, and I try to get Y code to verify if they're running. And I just do now. I don't do any hand coding at all. I've been like that for many months. No hand coding at all. I just chat with it. Off it goes, and it generates the code for me. Okay, that's an example right here. Okay, and again, this one's the option chains. Uh, to chains again is very valuable. I've got a multiple number of projects here I can show. Um, but I just want to show that. Okay, so that's just on the coding front. That's what everyone wants to know about and stuff. But let's get into the nitty gritty. Okay, so coming back to this project here I just talked about. Let's start. We have all the PDFs here, and I've gone through all of them. This one right here is the knowledge right here. Okay. So the process was fairly simple. Let me just see. I don't think I've shown this before. Let me see if I can find the raw text file right here. No. Um, yeah, this would be it. So basically, I use AI to generate raw news. Okay. This is a very lengthy file. Okay. I don't know how many lines it is, but 60,000 characters, blah, blah, blah. And basically, I get the AI again to summarize this into a PDF. And what I want you to take away from this process, where the bulk of the time is spent in this, is again investment for educational purposes, as this highlights here at the top. Again, for for options and futures market. So this I don't show a lot. I don't think I've shown it outside of last night's webinar, which I've just, as I said, kind of closed off, but I'm going to leave this as is. So we have our news drivers right here. Okay. So these are the big news drivers probably since Friday. We've got the blockade on the Strait of Hormuz, Iran proposed, and then this Fed's Kashkari warns of inflationary pressures from this conflict. Okay. So in here, obviously that's going to have a big impact on oil and all the derivative products that come out of oil, gasoline, kerosene, uh, heating oil, and the like. Okay. So in here, we have our instruments, the contracts. So here, it's predicting backwardation And each and every one of these points right here are trading opportunities. Okay. That's important. So in here we have calendar trades we could do just on the futures. This is where it gets very interesting. Just so you know, between Brent crude and which is international oil, and then WTI, as I said, which is a Western Texas as well. So it's U.S. based. So there, as they diverge, we get a trading opportunity there, and you can see here and how it's described. And I could use AI to break this down if I want, but it's enough to generate trading bots from it. Okay. And then again, we have the crack spreads, which is the gasoline, heating oil versus crude oil. Just so you know, one of the strategies that seems to be consistently profit is when they expect oil to go up. This one for gasoline can profit as well. Can do quite well when that's the case. Then we get into the important what the um, big firms are doing, the options trading, and this is how they're positioning them. This is pretty valuable stuff, and this is what people don't realize when you focus on options in the futures market. This is where wealth is created. Okay, so it's telling you exactly what to do. 1 to 3 month set of straddles, choosing a strike price of 90, having a put stew steepen the delta 20 of 25, volatility premium to calls, out of the money against those strikes on in this range as downside hedges. And again, which is what a lot of the big producers are doing. And again, you can see the breakdown of who's doing this. Okay. So these are the oil producers. These are your US based oil producers, be it um well not well it'd be like a BP, uh a mobile, Chevron and the like. This is what they're doing. Okay. Plus, they might be doing on the COMEX and ICE exchanges. Manage money. Again, this is what the hedge funds are doing. This is what the hedge funds are doing, all sussed out from the news. Um, Reducing contract size by 20,000 and current at 180. Those shorts increased by 30,000. So this is what it's basically saying. New speculative short betting on diplomatic breakthrough. So they're able to calculate that news call and then be able to set what direction the commodity will go in the option space. If it's going to be a long or short, or they can do a combination with the hedging as well. Okay, so again, I've talked about this in various streams on who's doing what from the institutional level. Okay, so here they have contango versus backwardation flips. The cost per barrel of a spot with a 6 month forward curve. Okay, and again, open interest. This is all forward looking. Okay, we're not looking at what happened today or what happened a week ago or a couple months ago. It's always the future, the risk. This is what they're looking at, how they're positioning themselves. And knowing this gives you that edge, major edge. And with AI, you can use this to develop your trading strategies. Okay. This is the part that people do not want to see, not want to address, and they just continue scrolling along, looking at their charts, wondering if they're losing money. Okay, so that's the energy. I'm sorry, oil itself, CL. Okay, and then we get into gas, which is one of the other drivers out of that as well. So you can see here some of the drivers on that, and it impacts the gas price. So here, Europe seeks alternatives to Russia as gas amid NATO tensions, and U.S. troop reduction in Germany, concern about Europe energy security, and they're right there. That's the impact right there, boosting natural gas demand. Okay, so again, this is how far out they go. They're going out all the way out to the winter season, making those calls, making the hedge calls, to reduce their potential losses if um, natural gas goes up. Okay, that's what the governments are doing. Hello, fine boy. How are you? If you got questions, let me know. Thank you for responding. Um, so we have here this widened spread. Okay, and that's what these are sort of things they're looking at. And again, this is both futures and option combos. So here they're anticipating cooling demand, LNG exports tighten, and then that will affect these two contracts. And again, you're looking at it right there. You long the N26 and short the Z26 right there. That's your trading opportunity just for that. Then you can use basis trades. Again, that's covered in this course I got if you're really new to it. And there's professionals, there's firms. That's all they do is they're arbitrageurs, longing TTF and shorting HH in the European gas premium space. And this is where most of the action and this is where most of the profit's going to come from. Okay. So again, call skew rise on natural gas 25 delta for volatility premium to puts versus the parity. Funds are buying these spreads on the June expiry on LNG export tailwind structured callers. Utilities are $3 per call to fund 250 puts. So it's actually telling you what to do. Okay. And then you can even get into what the CFT is doing. They're the regulators in the states. Okay. Manage money. Okay. Manage money. Those are your big firms. Like those could be your family offices. Those could be your hedge funds. Those could be the banks. Net long positions increased by 15,000 contracts to 120, largest since 2022. Okay. And then we have the commercials. These are the producers, oil, big energy producers, as I mentioned. Net short position expanding to a negative 300K, indicating producers hedging at higher prices. Okay. So that's how they protect themselves by doing the classic hedging. Okay. So this will obviously affect the interest rates on top of that. As I said, because of this cash carry call with potential rate hikes possible because they're anticipating inflation from this conflict, and so on and so forth. Okay, and this is the important part right here. What are the institutions doing? How are they positioning themselves? Okay, this is where you make your money. Okay, because you're mimicking what they're doing. Okay, and then you set up trades based around this if you wanted. So here again, look at how far down they go. SOFR, that overnight rate versus the December 26 spread. So they're using now end of year data to flatten the 15 uh, basis points from 25, betting on rate cuts, push to 2027. And the macro funds, again, these are usually the hedge funds, receiving selling December SOFR, paying buying June 26 steepeners. And then, of course, there's how it impacts the euro dollar as well. Shorting the 2026 euro dollar packs 5 consecutive quarters as traders price in higher, longer rates. Again, this is where again the action happens in the option space. Fed fund options, future options, 25 delta put on a December 26 for future contracts, strike at 4.75%. Heavy buying, hedging against no cuts. Okay, SOFR, corporate buying SOFR caps, hedging the floating rate bet. Now, that's going to be boring stuff. And if you're not interested in this, I'd probably recommend you get out of trading, even investing, because this is very critical to know what smart money is doing. As I keep saying, knowing what the institutions are doing. This is again what the smart money is doing. Okay, so this is again same thing on Treasury. I'm not going to go into that. You just want to know what the cryptos. Everyone wants crypto. Okay, so let's talk about crypto. I have other sections in these reports. I detail crypto alone, what happens to the retail space versus the future exchanges like the CME. Okay, so here We have our drivers, 79,000 resistance, highest weekly close since January. So now this is the other part. What are the institutions doing? Because they're the ones that are um, putting that move the price. So again, knowing this is how you are able to trade properly, quantify it, and predict the future moves of Bitcoin. So here we have 2.5 billion from strategy buying, along with Bitmine buying 10,000 Ethereum as well. And then here's the interesting one. I've talked about stable coins as well. For me, if I wanted, I could trade on Uniswap and just trading the difference between either Tether or USDC from Circle. I could trade like that, and I can get some pretty good income. But the problem is, it ties up a lot of capital. So you can get some decent returns from it, and it's a very, very high win-win ratio. And you can probably trade it also if you're in Kraken or one of the major retail Bitcoin exchanges. But the moves are very small, and it's really coffee money that your returns are. Okay, so I do have that, and I've looked into it, but it's just the opportunity cost is just to have money tied up is not good. But if the world would suddenly set on fire and there was nowhere else to move make money, um, that's all good too. All right, so this is the important part right here. What are the institutions doing? Okay, I've talked about this many times in my streams and my shorts as well. So we have here CME. Okay, so this is now the futures market on the CME with the spot market, and there's a basis trade there, opportunity. So the future trade at $200 premium to Binance. And again, it was $50 last week. That's telling you right there that as a metric you can use to measure and in showing institutional demand. Okay, and then we get into what are the quarterly moves. So we have June 2026 Bitcoin futures showing open interest surging plus 25% return on the CME as funds roll their positions over. So just knowing that right there should hopefully move Bitcoin. But again, the not smart money will not see that because they're sitting in front of their charts looking at their indicators, not knowing why it's going up, but behind the scenes, this is what's driving it. Okay. Right here. Um, because there's now institutional demand. Okay. Again, there's a volatility term structure. 1 million implied volatility, 80% greater than 3 million implied volatility, 65%. And what does that mean? We have a short dated demand for gamma hedging. Okay. If you were to trade, even in the crypto space, retail, like on Binance, you could do gamma hedging, and the timing is now the way it's looking. Okay. Put call skew, again, 25 delta put trade at 10 volatility premium versus 5 last week. So what are they doing? Institutions are buying at 70K puts for June expiry as downside hedges. Okay. So again, that's what they're anticipating. That's going to pump up the price. And look at this right here. Structured products. So the family offices are selling 85,000 calls to fund the 75K puts. Zero cost dollars, risk free. Okay. What happens to the markets? Open interest, Bitcoin, open interest, futures again, future outlook at 20 billion, all-time high. So they're anticipating something bad coming. That's probably why they're moving into Bitcoin. And as I said, between where to trade, that's where the CME dominates at 60% right now against all Bitcoin traded out there, including the spot markets like Binance. And then, of course, they're going to put in big block trades right here. 100 million block trades on a call spread between 80 and 90, traded as funds bet on the upside breakout. Okay. And then again, Ethereum will have its own behavior as well. So here, this is what they're doing. So it said Bitmine's buying 10,000. Okay. And that's from the Ethereum Foundation. And again, this is the important part, the ratio between Ethereum and Bitcoin. So we have key support at 0.06. And again, we have here what's happening in the futures market and the options. So we have the Ethereum Bitcoin basis trade. We fund the long Ethereum, and that's why I'm seeing probably more performance in the Ethereum side and more shorts on the Bitcoin futures to bet on the Ethereum outperformance. So that possibly means that my Ethereum or Ethereum Bitcoin strategy or bot, I'll see more trades on the Ethereum. And that's probably why, as I showed earlier, why the margin cost for Ethereum is so high, because people are buying into that. And that's why the margin costs have gone up for Ethereum, because the regulator, or sorry, the exchange manages that. So they're seeing something from institutions and they're raising that margin requirement for Ethereum. Okay, so then we have options. These are the types that you can put out there. Volatility, smile. Out of the money calls, strike at 4,000, trade at 15,000, volatile premium to at the money. So institutions are buying this right here with a risk reversal, 3.5 to 4K risk reversal, long straddles, 3K straddle, June expiry. So they're anticipating something because there's now heavy volume on that. So that basically means right here, open interest, Ethereum futures open interest surges plus 18% with a wowzer on the CME and the Binance. And that's probably why I showed earlier the anticipated Bitcoin Ethereum trade between the CME and the Binance. Okay, so if I had access to Binance, I could trade the futures or options on Binance, but because where I live in Ontario, Canada, I can't access Binance. Now I can't do any futures, any form of derivative trading in crypto being in Canada. Okay. So then we have another thing that's happening. So as a result, Solana gets more of the USD migration and could reduce the Ethereum liquidity premium. So the hedge funds will then short Ethereum volatility via variance swaps. Okay. And that's what the hedge funds are doing. Okay. So knowing all of that, what I just read you about the crypto space is very important. And everything's all built around timing and the logic of what's driving those decisions, built around news and risk of other instruments that's being traded in the futures market. And then I've also talked about here about the cross asset hedging strategies. So these are things like, as I said, commodity to crypto correlation, gold versus Bitcoin. Right here, I could go into this, and then there's the odd one, which I never would have thought of. To be honest, VIX versus cross asset volatility. This is pretty smart. And I think there's money to be made here for sure, because we know we expect VIX futures in the stock market may continue. And it's been building up. And then when you start to see swings of like 8% daily, I think this could be a genius trade because the AI picked it or showcased it. But the AI that goes out and will pick off what trading bots to trade off of this PDF. Individually, you could probably generate a strategy for this. This sounds like a good one. But AI that I use, and again, that's Codex 5.3, probably measures that might be too high risk. Okay. We've already gone through the risk metrics on that portfolio on the spreadsheets and stuff that's shown you. So the funds in a long VIX, short BVOL, Bitcoin volatility as crypto volatility compresses. Okay. So there's your trade right there. Then we have the FX futures again with different currencies. The funny thing is, in the world of which is kind of funny because I watch these YouTubers thinking they're geniuses and they're saying, or I don't know if it was an article or saying, oh, Bitcoin and NASDAQ correlations coming back, but yet in here you're not seeing that mention. You're seeing it with gold. You're seeing it with different currency pairs. And this is again what the institutions are doing. Okay. So likely this Bitcoin and NASDAQ correlation really is just in spurts. I'd probably put more emphasis on this right now, personally. Okay, so then again we have our summary. And again, this is the really important one. What we want to do here on the key themes is to watch where the hot capital flow goes. Okay. That's important. That's how you win consistently. Okay. And you're not here to argue what will trade and what won't. We're here to make cash. We're here to make money. So we have to follow what's happening and what's being mentioned in this PDF. And again, this is institutional level trading. Okay, so here we're institutions rotating from single asset bets. So they're going again from single asset bets to, as I keep saying, asset relative to value trades, which we've kind of covered. Emphasis on tail risk hedging. That's can be where your tail risk is the most extreme. So if you're on the short or the long side, that's where you're going to make your max opportunity. Okay. And again, where that comes out of is through option structures. Okay. That's where you're going to build your wealth again. And that's why these people that do this are making millions upon millions of dollars that people say, oh, it's not fair. Well, oh, well, I'm not going to get into that. Again, a lot of this is driven by geopolitical uh, commodities and risk. Okay. So inflation's persistent. That's going to be hanging around. We got verification from that from cash carry. View a political fragmentation because of the war that we're and what does it mean? Higher volatility, wider spreads, and defensive positioning, which means cha-ching, cha-ching, ka-ching is opportunity that most of the retail will not know about. And I can see just from the stream, I think, I don't know how many people are actually going to watch this over the whole thing. But again, no one said that this is easy. Now you can see here, which is reaching page 6 out of 27. I could go on and on about this, all the different hedging, go to hike risk. What happens if the third party closes Hormuz? What's the impact on that? How do we position ourselves? And again, this opportunity right here, which is the highest reward, lowest risk. Okay, that's what was projected. And again, there's going to be some impact on that on these three that you could easily trade for gasoline, diesel, and jet fuel. So you can magnify your profit opportunity as well. And it's all geo based. Okay, you can see right here. Um, and not just that, but you can see it's impacting gas, RB. If you have access to trading Singapore, in Dubai as well, and then if you wanted to trade, and then you might have you could trade these if you have access in the futures market. Platts Japan, EFP, exchange for physical trades. Again, here's your opportunity and the call spreads. Now, I don't know what the volumes of those going to be, but generally, as I said earlier, the AI will pick what it thinks will be the highest impacted via volume. That's why you see the more popular instruments. But you could trade these individually based upon this report. Okay. So again, USC gasoline spread, the crack spread with gasoline, that can, as I said, that can do extremely well. Natural gas, I've not had any real success with so far. Usually natural gas will come up in the winter season. But natural gas is important because of the war and everybody wants their energy so that their economies are not impacted. Okay. So you can see here Pakistan, all the big news drivers, China, India, um, and so on. I could go on about this, and every single one of these um, is an opportunity to trade. Again, look at what, like, I know one of the bots was generated based upon this lithium, aluminum, and base metals. Okay, so we have here lithium hydroxide carbonate futures on the CME and Guangzhou in China. Okay, USGS Appalachia Discovery, 328 years. That's a recent news item. Import demand, and then how that affects everything. So we have here for lithium, long-term supply glut, near-term squeeze persists due to Iran war disruption, lithium shipping, and that's the bot that was mentioned earlier. Chile, Argentina to Asia, because they're one of the bigger suppliers of lithium. And China refining fuel export resumption, for which will signal EV battery demand may hold up. Okay, and it just doesn't stop there. So this is what the institutions are doing. Hedge funds shorting the CME lithium hydroxide December, 25 per contract, down from 80 per contract. Producers, okay, so these are the big producers: SQM, LB, Marion. Looking at prices via zero cost dollar, selling calls and buying calls, because each of these corporations that I'm mentioning, these producers, they have their own big time trading desks to protect their future calls, their option trading and hedging, to put in contracts for the supply of whatever um, mineral material that they're specializing in terms of producing. And again, we have the options as well. So right here, heavy put buying in 2027 contracts for next year. That's how far along it goes, because this is the future market. And the question becomes, why do you want to trade the current market, or you want to trade what's from the past? Again, this is what the big firms are doing. Okay. Again, lithium curve flattening. Again, December 26, longing 27, Appalachian supply. And then we have copper as well, because copper is part of that mix for battery development based upon EV demand. Now, if you haven't seen the videos that came out of the Beijing car show, I've seen a variety of them. There's over 30 million cars produced in China. Okay, 30 million. Um, so that tells you um, the EV demand out of China for lithium, and plus the states as well as they move into it, and maybe even Europe. So again, we have aluminum. Okay, right here, all the different news items that come out of that. Copper's another big one, and it's quite surprising when you have guys like Rick Rule going on about copper. I'm not sure if he's trading like this or seeing what's happening, because Rick Rule's all over copper as the next big super cycle move. Um, Asia Pacific infrastructure plan, bullish for copper. We're building out power grids, EVs, digital infrastructure for obviously the data centers around AI. So yeah, copper is going to move up. Macro funds longing copper COMEX, December 26th, targeting 12,000 per ton. And then we have the mining firms as well, selling the call overwrite, December 26th, $10,000 calls. China fuel export resumption, and then the domestic demand may soften. Okay. And this is again the outlook, again, what the institutions are doing. Copper gold trade, call back spreads by, the amount, $11,000 calls, sell 12,000 for asymmetric upside. So it's really important to understand why I've been stressing this. You got to know options. Equity is part of that. But when you add in all these extra instruments like metal, oil, um, gold, and then the financial space with the currencies, and also the big ones now, surprising, is crypto, Bitcoin and Ethereum, as I mentioned earlier. Then we get into agriculture. I don't know if you guys are following, but if this Strait of Hormuz persists, we're going to have oil production problems, energy production, and then that will impact price of food, because how do we get the food production to grocery stores, and that's going to have a very high potential risk on agriculture, right? So we've got wheat, corn, soybean coming out of Russia. Drone strikes can drive that. These are the big ones right here. So we're talking about the private agriculture producers, Cargill, ADM, and the impact it has on these. Plus, they're looking at the Baltic Freight Index as part of a metric. And then here's the call, what the CTAs are doing. Again, another type of institutional trader, short corn versus wheat. And same with rice as well, seeing institutional inflows. Okay. So these type of themes are becoming long-term trading opportunities with higher volume and probably more positive trend momentum that we used to have in uh, the S&P and the Nasdaq. Okay, because this might be the new replacement over the next maybe 6 months to a year is in the agricultural space. Okay, and you can see here we get into also into coffee, sugar. We do know sugar had a good run a while back. Same with coffee. So again, this could be the next big places to go. Um, and what drives it? Ethanol demand. And I mentioned RBOB as an opportunity. And one of my strategies that I've tested does really good. And again, we get into interest rates and macro funds with all the different um, durations of treasury. I'm not going to get in that because people will be falling asleep. A lot of people will know about Forex because we got the meta traders, meta trader, MT4, MT5 traders, and they're getting killed because they're not watching the drivers. They think they are, and I really don't think they are. So we have the DXY, the dollar, Hormuz cruise, plus the federal pause makes the US dollar a safe haven. So when the markets weren't doing well, I believe it was 2022, you could just hang out in holding US dollar and you'd be making good cash and not have to do anything with that and get a. I said I did that, and I was honestly by luck. I got a 17% return on it. And I was beating everybody out just by doing nothing and holding US dollar. Okay. So that's if that continues, that's another area to be in. So then we have yen weakness. Again, that's that yen carry forward trade. Um, BOJ, slow normalization puts pressure on the yen and then the risk reversal as well. Okay. And then here's the strategies right here. Okay. DXY correlation trade, long DXY, short gold, carry trade, Mexican peso, short Japanese yen, Mexican peso high rate versus Japanese low yields. Now, I will say from my experience with the yen, I've not done well with it. Any of the currencies, the only one, as I said earlier, that I'm doing okay with is euro. Now, that could be a short-term trend. I don't know. But so far, it's looking okay. Then we get into Bitcoin, and we've already gone over that. But there could be some more further detail on that. And again, this one Bitcoin versus gold ratio that's watched. So we're longing Bitcoin, shorting gold, right? And then we can trade VIX itself. Now, as I said before, if you want to make really good cash returns, the market tanks, the volatility goes up because of it, you can trade the VIX. Okay. So these are your different instruments and ETFs you could trade. Long GVV, gold volatility, short oil volatility, gold as crisis hedge. Probably more under extreme conditions. Commodity volatility arbitrage, lithium volatility versus copper volatility. Okay. Um, right there. So if Appalachia discovers, it will crush that volatility. And again, tail risk, as I said, popular institutional trades. Okay. You won't find this anywhere else, I don't think. You long OTM on Brent, short the S&P put. Okay. Again, you're seeing more and more options here. That's why it's done. And, you know, I just don't know what more I can tell you. So here's some themes that come out of that, so on and so forth. I could go on here. Okay. So we're now halfway, or just under halfway, page 12, 27. And again, it repeats itself, but every section is really specializing in certain asset classes. Um, and here's more detail. Okay. Here's Australian US dollar if you want it, but that will have lower volume, right? And you can see what the different indices are saying. Who's hedging? Dealers, corporate hedging, blah, 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 blah. Fed calls, overnight rates, bonds, gilts from the British. Okay. And good old Pete, acrobat. Yeah. So I don't know. I just don't know. But you're not seeing a lot of calls for the equities for S&P 500. There are lots of arbitrage. This is a good chart here as an example. This is the risk factor right here, what it'll impact, okay, in the futures and options, and what are the hedging opportunities right here. Options volatility and skew analysis, okay. Again, if you took that course, you know what I'm talking about, okay. Here we have the asset class, 1 million ATM volatility, 25 delta risk reversal, skew steepness, and key trades right here. And exactly precisely what to do, what to trade. And this is, as I said, hot capital flow. This is what they did in the last week. Okay. This is what's coming up this week, what will drive these instruments right here and the reasons for it. So here we have the Royal Bank of Australia rate decision. Obviously, it's going to impact the Australian dollar. This is the anticipated option trade. Long Australia US dollar straddle and short the SPI. Okay. Same with the British pound, the gilt, blah, 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 blah. There's about 5 million reports in this entire report. And this is where the news comes from, where the trading bots come from. Okay. I can go through this. I've shown you the crypto, which a lot of people want. I don't know. So right here, this is probably where that E-mini strategy came from, or part of it. E-mini S&P 500 ES versus the NASDAQ. ES for the June 2026 open interest skewed short. And that's the anticipated move. Asset managers are returning equity beta ahead of Fed uncertainty. So that it could be the ES could go down. The S&P 500 could go down based upon that. So here's the ratio between the ES, NASDAQ and ES, historic highs, because the funds are shorting that NASDAQ, longing the ES to neutralize sector risk. And again, higher risk, but higher reward. Number of contracts put ratios for September being structured as callers against policy risk. And the NQ volatility skewed, blah, 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 blah. We have the VIX futures that's impacted by that. We have the Russell in there. Some ETFs, as I've mentioned before, that will go long, short. That's what the institutions are doing. Dollar, emerging markets, usually it's Mexican and the Brazilian real. I could go on and on and on about this. Okay, so we're just coming close to the end here. U.S. economics resilience versus the Fed call policy, inflation risk, blah, 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 blah. We have a call on one of the Fed Treasury bots. Okay. Yeah. So that's pretty meaty right there. A lot of the meat is in this. Okay. So right here is where it's interesting. Market dynamics and liquidity considerations. So right here, let me see if there's any other tables. No. So right here, this is what the key institutional trades are setting up. So again, we have our trade type, the instrument, the strategy, and the rationale. So this is what institutions could be doing. Okay. So we have TLT, CL, NAS, NQ, VX, Japan versus the Euro ratio trade, GC cover calls, XPX, the actual strategy, and the rationale driver behind those calls. Okay, and then this right here, market dynamics. Okay, liquidity drain. Okay, on the extreme side. But this is where it gets interesting. If you are an algo trader, the major HFT funds, let's say, CTA, momentum strategies, trend following in ES, CL, and GC. So that's S&P 500, oil, gold. Dealer gamma exposure, spot gamma, negative gamma, and SPX, increased volatility. And then we also have the regulatory risk as well. Okay, and look at this. We also have key drivers for the upcoming week. Fed speaker, April job report, China trade data, OPEC plus meeting, and the impact on that. Very, very good stuff, I have to admit. Okay, final thoughts, blah, blah, blah. Biggest risk, blah, blah, blah. Okay, I know that's a lot. That is a lot to deal with. Okay, but if you're still here watching from the beginning, then you know exactly why the portfolio managers get paid in the millions to watch this sort of stuff every day. And being able to set up trades like this, and now they have the algo traders, and now it's coming out the systematic portfolio managers, all driven by AI, as I've shown. All right, so this is not sure how long this has been going, but there you go. If you got any questions, comments, let me know. Um, as I said, I'll keep this one up because I haven't gone into the options, how I can do that, but I do have the capabilities of running options. Um, and the only thing that's holding me back from doing it is the actual API I work with, plus the actual processing that's needing to be done with the computer utilization. So obviously I'll have to be on something GPU like. And one of the things I've just learned earlier today, Asus and AMD are having a big webinar later in April, in May, I think on the 23rd. I will be part of. I'm going to be an attendee, and they'll go over these new desktop PCs they're bringing out with I can't remember the name of the Ridex. I can't remember the name of the board, but that's from AMD, and that's going to be on a desktop or a mini desktop PC from Asus. So there's going to be a webinar. So I'm kind of eyeing that, potentially see how that, what the cost will be and the performance and what's expected. So I might get something like that. Will fit all my requirements. Hi, what was the file you reviewed? The big one is this one. Let me go back to the screen here. This is, you probably joined late, which is fine. If you want, I probably start at the beginning once this video is rendered. So I'm generating news, generating bots from that, and that is generated from the trading report I just showed you in full detail. And the AI picks out those trading bots, all done in Python. Okay, so hopefully that'll answer that question. Okay, and here's the VS Code project involved. Everything 100% generated by AI. 100%. Okay. If you guys got any other comments, let me know, or questions. Let me just go back to my lovely screen here. So I like to see myself talk. Uh, yeah, so that's pretty well it. But my point here on this stream is to show you how secondary coding is in the world of quant trading, the modern quant trading, in the firms. You're just like just another regular employee. I mean, I hate saying that, but if you're just focusing on coding, and you get paid well, but if you want to, let's say, uh, magnify your pay scale by 2, 3 times, maybe up to 10 times and beyond that, you need to move into build value for a firm, whatever firm that will be. And that's what I just showed you. That's where the real revenue is for, high salaries are for in the portfolio managing, risk managing positions, to be able to analyze this type of news and suss it out and figure out where the maximum trading opportunities are. And I've just spent what, an hour on that, and they're good. That's all they do. And they're running multiple portfolio teams, as they call them, pods. And they're gonna have their quant researchers. They're gonna have their coders, but they're gonna be at the lower tier of the whole value chain, you call it, or ecosystem chain within these firms. You want to move into portfolio management. That's it. Is this available to the public? Yeah, kind of. Um, yeah. If you're looking to get free, I don't know. What I could show you right here. Let me go back to my screen here. Um, this is the sales pitch now, I guess. Okay. So there's two paths you can go with this. Okay. In here, I've shown this earlier. Uh, let me just pull this out from my other screen here. So this right here is the place where you start. If you're wanting, right here, if you're wanting to get into algo trading, I think you should be able to get this at the bottom of the stream itself, depending upon where you are. If you're on YouTube, you can go here on hftcode.com and pick off this one from the main menu. It's really cheap, like €47, and this will kind of get you started with Quad Code and Interactive Brokers API in Python, and work with Quad Code to get you to where I'm at now. The reports themselves, what I'm just showing you here, all these PDFs, the bot plan, that is part of my main site at quantlabsnet.com. I have a trial if you're interested in this, a membership service monthly. I try to put these up daily. Okay, so we have here the trial right here, or the try at quantlabsnet.com. Just come under more. You can get that. You can try it, get your 7-day trial, try it out. I think I give access to the futures and options course I mentioned as well. So you could try that out, and then you would get access to the PDFs I just showed you. You'd have to go under the groups here. And then I have a public group that's growing, 535 members. But this is the quant finance group I'm talking about, which is the paywall. So in here, what we've got is all the available PDFs and stuff I put out every day, the PDFs, the bot plan. So yeah, that can be public, even in a trial for free. And if you want to continue with that, you can do that. Now, I do know there's a bug here, my trial. Just so you know, right here, if you go under trial, you can see this cost right here. You can get grandfathered at this price right here. If you come under here, under my plan, it should be theoretically this amount, 50%. So I'll be purposely not touching that. And if you can afford this for the complete access to everything, and as I start live trading, this could go up a lot too, because that's really targeting firms as well. Hopefully that'll answer that question. Anybody else got questions at all or comments? I know there's people coming in and out of this. Thanks for that, the John 416. I'm assuming you're in Toronto based upon your area code, which I am in Toronto too. Any other questions or comments? So I've shown you quite a bit. It's 4 o'clock my time. I just don't know how long I've been going at this. I do these streams on Tuesday nights, 7 p.m. So I'm going to keep this format for this Tuesday for sure. We'll see how this stream does, the interest and the like. I'm only doing this because that's what the YouTube AI is telling me to do. So I'm doing that. And, you know, the engagement, I put a lot out there with this big report, this big long one here. But that was the point, because that's the amount of detail I can give. And that's where the wealth gets created, not in the bot coding, not in the quant with the math. I can do that all via AI. Okay. So all those skills, unfortunately, will become less and less, no different than the fate of junior coding right now. It's just over the long run. I'm able to do all of that. What I just said, quant coding, quant research, all the math I can do with AI, very sophisticated levels. Oh, hey, Aaron, how you doing? Thanks for doing this. The least surprised seeing you today. Well, just so you know, Aaron, I don't know, is it Aaron or Arun? I apologize for if I'm getting that wrong. Um, I've been testing out these random streams under my live. You should have access to the one I did last night. That included the options. I'll probably be removing that in the next couple of days, but this was on purpose to show you this exact format with the second screen and go into the more the technical nitty gritty and the reports themselves as well. I think this is important for people to see, but yet people don't want to acknowledge the value it brings to be a consistent, profitable trader over the long run. And as I said, it could change your life getting into the mindset like this to understand all this terminology. Because I'm going to be honest, even I struggle with it. But this is how a lot of the big firms trade as well. So I'll be going back to my regular schedule Tuesday nights as well. So if you're still around, Aaron, let me just show you this. So last night I put out a video, a stream I did for 2 hours right here under the Quant Finance Group. You should have access to, and then here, what you'll find is the link at the bottom here to my private video. I mean, I enlisted it because, as I said, I did feel I crossed the line. I crossed the line in terms of the options. When I say cross the line, putting too much info out there. And that's why I'm going to remove it in the next few days. And only people that are willing to try out this thing or are actually current members or clientele of mine, paying customers as well, I should say. Anybody else got any questions or comments? And if you missed the prior of this, uh, let this thing render and you'll be able to watch this from the start as well. Okay. And I'm hoping to go live trading in the next few days with the gold strategy and maybe the Ethereum and Bitcoin. From what I'm seeing in this report I just read out, May, June might be a very good month for Ethereum. I don't know. No problem, Aaron. I appreciate you being here as usual. There'll be the scheduled ones as well on Tuesday nights. So Dad John said, I've tried every room waiting for a profitable agent to come to retail. Um, there's a lot of third parties out there trying to mimic that. I just don't think that, it's like a clock. It's a broken clock. It can be correct twice every day, because everything's all built around timing. So if you get one of these so-called trading bots from a third party that promises you the world, it may work under certain conditions. That's why I've designed everything and implement everything the way I've done it now. Meaning, we work off of news. I've shown you today's freshest data set of news as well. And as I said as well, I've shown you all of the bots that get, as I said, and the key is dynamically created, okay, based upon this news, okay. And again, that is just generated right now. It's 4 o'clock. I've been blabbing for a good couple of hours, but that was generated at 1:30 today, okay. Even though it's Sunday, I could set these up for tonight when the market's open. So that's that. Yeah, so let me show you again what I'm talking about for anybody who's coming in later. It's these HTML files that I put out the PDF version of it, but they're not as good looking as the HTML version. But you can see here, here's the different types of bots, profit potential I've gone over earlier, the metrics as well, and the cost, which is very important. So put that in there. The number of contracts to run, potential profit. Again, it's potential because it's based on projected. Okay, so it's definitely not going to give you that. I can assure you of that. But out of that, you may get one bot that may become an all-star winner. And that's how I find those 14 other bots have done really well because of that um, as well. And here we've got expected return, as I said. I could put all the information with the options as well. Um, and if you watch the entire report analysis, you can see majority of it is built around options. What I'm doing right now, again, is because I'm just focusing on futures. But I do have the technology and the code to do the options if I want, when I want. And again, here's the portfolio metric for these bots that were talked about at the beginning and the projection. And as I said earlier, this is the highest margin call cost Ethereum. And as I said, now going through that report in detail, I know exactly why the Ethereum margin is the highest, because a lot of the funds and hedge and the institutions see that there's going to be quite possibly a lot of calls put on Ethereum, so the margin goes up because of that. Built around what I'm seeing. So this is how it's done on from a professional side, and specifically on the CME related exchanges. And as I said earlier, I could easily add in the Asian ones, the European ones as well. ICE, I could do SGX, whatever my provider, which is Rhythmic, gives me and gives me access to. And that's pretty well global. As I said, I'm going to be attaching everything to interactive brokers and trying to mimic these performing bots with interactive brokers. But remember, with interactive brokers versus something like Rhythmic, it's two different behaviors. So I can't guarantee that if I'm saying what I'm seeing in Rhythmic with the market data coming out of Rhythmic would be identical to what I'm seeing with interactive brokers. So there may be that difference. Arun said, did that Clarity Act get sorted? I'm not sure. Final. I do know that I'm just going to pull up a news story here. Here, this just came up on Independent. So right here, this is a big event that will drive price of oil. This just came out. Chevron CEO warns Trump oil crisis could get even worse. So what does that do for what I'd shown you earlier? The CL trade right here, the Brent WTI. This one just makes that potential strategy more lucrative. Just as an example of news that just crossed. Did the Clarity Act get sorted? I believe so. I know Coinbase wasn't part of it, and it's always favoring the bank lobbyists. So it's as they call it, it's a bankers' war. The banks are the ones that are in control of pretty well the Western, maybe even the global economy. So that Clarity Act, I believe, might have been sorted out. I haven't really seen news on it, but even if it is, it's dangerous times with that act, or the two acts, the Genius Act and the Clarity Act, because what's happening is they're trying to get people, mostly pension funds, to soak up treasury demand with USDC or Tether, not the actual fiat US dollar. And then who knows what happens to those stable coins with all the treasury trades on it. And as I said earlier, there was also, funny enough, a news item on USDC's moving over to Solana. So there might be some demand for Solana as well because of that. Let me see if I can find that news. So this little report. So yeah, right here. This could have an impact on Solana, the price as well in the futures market, because USDC migration, which is like $750 million mint. So there's that. Yeah. So just live, real time examples, and just trying to get into that mindset of how portfolio managers think from an institutional level, using AI as your tool to help you. And that's why, as I said at the beginning, why coding is so secondary. I mean, it's an important skill to have. Math is important, but with AI, um, it does help resolve things, and the AI is getting more advanced now in the world of the latest from OpenAI with the ChatGPT 5.5 Pro and Manus as well. Not Manus, sorry, Claude, like Opus 4.7. It's just we're getting better at debugging and blah 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 blah. So the focus for traders is if they want to maintain wealth, reduce and minimize their downside risk using futures, but putting more of the profit opportunity will come out of options. And when the nice thing about options, it's unlimited. Like when you have a profit run, it's unlimited. Whereas other assets will have a uh, reason why it gets capped. Would you do anything on prop firms at all? I know that's a different on what you are looking at currently. I do know in the same report it did have uh prior there's a news item on this report. Let's see if I can find it. No. Um, I wouldn't go with prop firms at all because, as I've shown before, you can get in. It's like Hotel California, the song. You can check any time, but checking out you can't do. And you're at the you're beholden to the prop firm when you can get your payout based upon whatever rules. And again, class action lawsuits come out of that. So I would not recommend that. You spoke about a GPU earlier. Are you going to get a crazy machine? No. Um, it's hard to say because I don't know what my travel plans are yet. I'm right now just hunkering down because of the war and flying is becoming very questionable. I wanted to do that in the cloud. Let me see if I can find that event, that webinar event, um, with ASUS. I'm sure I can find it just to let people know. ASUS AMD webinar in May. Let's see if I can find it. Okay, right here. So I think I found it. Yeah. Okay, so there's two events coming out. This one against from Asus. Now, Asus is a great manufacturer. I trust them. So there's this one right here. Um, so there's different time for across the world. Um, and they're going to talk about this new AMD uh, Ryzen that's part of the system and the Asus Mini PC portfolio, and they have a whole series of them coming out in June. So I'm holding off and just seeing what comes out of this, how much they are. This brand I like Asus, so this is something I'm very interested in getting. In terms of the GPU, it doesn't really matter because again, from the coding perspective, I can always use the AI to code it for whatever um, GPU, a software development kit. If it's CUDA, like as an example for NVIDIA, I can do the equivalent, I'm sure, with AMD. So here, explore AMD powered mini PCs. So it's going to have these Ryzen boards in them. So I think that's going to be a really good combination. And again, these things are coming out. I believe I saw another news item come out in June. These might be pricey because it's fairly new. But yeah, I'm interested in these kind of products. And the reason I'm interested in them is because I've talked about with the options chain. It takes up a lot of processing time for a computer to, because I'm doing everything sequentially. And as a result, that means when I download data, especially option chain data, the first thing it's got to do is got to go through the gather all the option chain data. I could show you an example here. Um, because this is part of where I put a lot of development in. What you're looking at right now is the actual output of the whole process that goes from generating news to creating the bots. So you can see it's a bot generator, and it's an AI using, again, Codex 5.3 to generate each trading bot. So what I'm going to show you here is, as a test, I do this on purpose. So these are each trading bot. Okay, that's generated. So here's the trading bot plan. Okay, with the risk metrics, I've shown this already. But where it gets very interesting is I've not shown is this right here. So this is what I'm talking about right here. This is why I need these computers. Okay, so it's going out, trying to download the option chain. Very difficult to do. I had to spend a good amount of money to do this. Okay, and because the API I use uh, limits me, even though I'm paying for it on the call. So it's going out for the ES to do the option chain discovery. It tries to find the optimal chain to go with. Okay, so here's the number of contracts for these expiry on each of these option chains. So you can see it goes all the way out to the end of December 2029. Number of contracts. So the most contracts are always going to be more recent. And then, of course, it's days from target, and it'll go out and select that particular chain. And then the problem is right here. So this is the sample chain it's going to use. And this is a very highly liquid asset, which is the ES M26 option chain. Okay, so it's got price of 72.47, day to expiry at 46 days, across both the put and call with the appropriate strike price. So where I need the GPUs to be able to do that for all the instruments I'm interested in trading, to go through that very quickly with that chain discovery, on top of being able to assess the put and call side of each of that particular um, instrument, sorry, option chain, and then do that very frequently across, maybe you can't do it across 30 instruments, that's for sure, because it's very, you have so much limitations you have when you have your connections into your provider and via API. And then at the same time, you have to assess that chain with the Greek analysis and analyze the open interest for each strike price. So that's where you need the GPU usage. And that is very intense. I can't do that. That's one of the reasons why I'm doing futures only. Okay. Technically, I can do it. I have the coding for it. Again, I can use the code to do that. But only a GPU board or a series of them will enable me to look at the price discovery and then be able to find the optimal strike price for both the put or the call side and determine which to go with, and being able to stream that in and maybe do that every few minutes or maybe a minute. I don't know what my limitation is, but that's part of it. Um, Good question though, um, because that's the key. And I can assure you, interactive brokers can do that. It's just not as responsive as if you're using Rhythmic. And then you can scale it up as well to higher tier APIs as well, which I've talked about in the past. And again, this is all driven by AI. So that's a good question. And hopefully I've answered that for you. See, anybody else got any questions or comments or stuff? But that's where I could go technically. I've now backed up my entire source code securely across three different resources. Um, because of this valuable code that I've worked on for the last few months. But the really valuable one is the futures trade, uh, the bot that I mentioned here under my profit folder. Where is it? Oh, wrong. I got my wrong project here. Let's see here. This project I got to load up. So I have here in here a project that is updated and it has something very, very valuable to me now. This guy right here. So these are all my profitable strategies I've tried for about 10 days now. And this one right here is I'll call it the perfect trader under the right conditions. Never taken a loss. Like GC, gold, futures, directional strategies done amazing. And then one of these is doing quite well, the euro. I've got three here, I believe. And then this Bitcoin Ethereum trade, spread bought or strategies done exceptionally well under the right conditions. Those are the profitable strategies, and that's why I've done the backups, because that's the value moving forward for me when I go live. And that's what I'm going to focus on is, as I said, the gold and the euro, the Ethereum Bitcoin. And from the bots that I've reported, it's Ethereum could be a good winner over the next 2 months from what I just showed in that report. So there's that. Any other questions or comments at all? We've gone through the nitty gritty of the technical. I'm not showing that at all. But this is all recent. Like that webinar I just showed you. If you want to capture that, all you have to do is just do a search on Google if you want to attend this webinar. And again, I don't work for either company. I'm just finding this a very interesting webinar to attend. And I'm interested in mini PCs with a GPU in it. And again, if you want to know about it, just Google search ASUS, ASUS, AMD webinar in May. Okay, so this is it. And I think it's May 12th in the next week or so. Yeah, so that's what I'm looking at right now. NVIDIA may be too expensive. I don't know. Any other comments or questions at all? So we're at 4:30. Appreciate you being here, folks. Good questions. Good questions. But as I've trying to prove here, the money is in the options on the futures market. Okay, I've shown that what the institutions are doing, and you can quantify those trade positioning and build systems or scripts around that. I could probably generate code in C++ if I wanted, but that's really, as I said before, that's really overkill for the portfolio size. If you really want to go in that direction with C++, I think you'd have to have a minimum uh, portfolio size of 500,000 to make it worthwhile to really take advantage of its speed and whatnot. And then with that, if you get successful strategies in place, you could move into an HFT environment, and you could either stick with a low latency C++ strategy for the CME Aurora data center, where everybody trades, the big firms, which is very expensive for data and blah blah blah, and technology. And then you could take it to the next level and go to FPGA, but you really can't do anything for under 500,000 at least account size because of the cost. But if you get really good at it, from the AI I've reported, you could with a really good HFT strategy, you could make the highest I've seen from the AI that spat out was 1.2 million per week off of full wrap of certain strategies, and just doing it low latency, probably ultra low latency if you want, either in C++ or FPGA. And yeah, I can assure you that the AI is now capable of coding that. I've seen it. I've tried it. Very expensive process, but it can be done. Actually, in my more expensive that membership, I do have some projects that do that as well. That's why it's very expensive. Any other questions or comments? We're coming up to 4:30 my time. I like to preserve my voice, as you can imagine. I've been blabbing for what, 2 and a bit hours, maybe? I can start at 2:30, but I don't mind doing this. But I'm hoping some people get some value out of it. As I said, the more detailed video stream I did last night, I'll be removing that in the next few days. So I put an email on it, and you want to get on that because I'm not going to keep that up. I have not. I felt I have not crossed any lines here by showing you the options side of things. So I should be okay there. I'm pretty confident in that because I'm just showing you the end result of the option chains and the how I do it as well. So there's nothing proprietary there. But remember, always when it comes to prop shops, they only focus on futures. They don't do options because of the risk. I couldn't imagine what the reporting must be like and the regulation out of that. But if you're doing it on your own, you got a big enough account, you should be able to do the the uh, the options as well because that's where the real lucrative whatnot is. Okay. So as I said, if you got questions or comments, let me know. I'm just watching the feed here. If you're on another platform, I'm only looking at YouTube. I can't look at the Facebook. I do know that Instagram can work. I'm waiting for approval on TikTok, and I'm also hoping to get on X as well. So I have the capabilities supposedly to get on those platforms, but for sure I'm only going to focus on YouTube because that's where most of my traffic comes from. Oh, new people. All I can say is watch the start of this video once it's rendered under my live. But anyways, the question was from Brendan Biden. What are these 11 new bots? Efficiency, edges, volatility, arbitrage. I can go over them again just for fun. It's amazing. Okay. All right. So let me go back here. Okay. So I'm gonna do this for the last time if somebody new comes in. Okay, okay, let's go over the bot portfolio from today. Okay. Now that doesn't mean what I'm showing you I'll go with for tonight to simulate, but definitely I could do another batch. Okay, so we're dealing with Brent WTI spread. I've gone over the detail of that from the news report. Look at an hour. This one right here. So I've gone over that in great detail. You can watch that once this video is rendered. SOFR curve steepener, so it's institutional level stuff. Again, natural gas, copper versus lithium. We went into great detail with that. S&P mini versus the Russell. 10-year, 2-year treasury steepener. Bitcoin CME versus Binance arbitrage. Ethereum versus Bitcoin futures ratio trade. Gold versus Bitcoin. DXY versus the Euro Stocks 50. And the Ultra Bond versus the 10-year. So those are the bots we've covered. If you want to know the logic on why, all I can tell you is just watch this full-on video. Uh, yeah, watch the whole video once it's rendered. That's all I can tell you. I'll be keeping this on YouTube, not unlike the other one I did last night. So that's generally what we've talked about. It's all institutional level stuff in Python. I've talked about why these portfolio managers are getting the head of the portfolio managers and the big firms get paid up to 50 million pounds in London. Okay, if you prove yourself over time and you get deep into this and you can consistently doing this with all the metrics I've shown, yeah, this is where you want to go. Coding, it's a starting point. Math is a starting point. But the trading always, always, always overrules everything else. And if you want to make the max, what can I tell you? You want to be in the futures and options space. And if you want to be a successful, you just saw the three, is it two? Maybe three bots that are just dynamically created from AI. So there's some arbitrage in there, there's correlation. Let's see, one's built around cross commodity spread. So there's different types. Summer, winter spread. So it could be anything. Okay, so 4:31. Give me 5 minutes. And I'll call it a day. I'll be back on Tuesday nights, kind of given the same format, and I'll actually have a specific topic to go from. We'll see how it goes. But if you have any comments, questions, let me know now. Because I got to rest. I've been going out all last hard for the last 3 days on this. Cheers! I just made a cross exchange Arb bought in Rust for Ethereum, similar to your parents there. LOL. Yes, yes, yes. It's common. Depends upon what AI you're using. I'm using Codex 5.3. I will tell you, I've done a webinar on this actually. The difference between each model, including all the Chinese popular ones and Claude. They're all different. Well, they give you the same type of trading bots, but the math behind it, the algorithms using different techniques. I have purposely prompted my newer bots over the last couple of weeks not to use third-party dependencies at all in Python. Pandas, NumPy, TA or TA lib, all of that's thrown out. The AI tells those bots to generate their own math in the Python itself. It has to. Because when I started doing that on LinkedIn, I started seeing, oh, I got rid of all my dependencies in Python and I'm making way more money because the win ratios go up a lot when you take out the third party packages or dependencies in Python. Because you let the AI develop all the math formulas for you. It just seems to be a higher probability to build out higher quality bots because you're not dependent upon third party packages. They may not be optimal. And again, as I said, each AI model or LLM will give you and generate those math formulas differently and give you a totally different type of strategy as well. But generally, one of the top rules now when I tell people from prompting and creating trading bots, don't use any third party dependencies whatsoever. Force the AI to develop that for you, meaning have it write the math for you. And you can do the same thing in Quant. I just find the Quant is more complicated and only really benefits if you have a big account. As I said, 500,000. I don't know. I know one guy right now who's active with me who's got a big account. And the other one is the math. Okay, the really specific math, that's only really useful on the high speed stuff, like we're talking HFT stuff. You want to keep those small. Well, good on you, Brandon. I hope you're profiting. I hope everybody, whoever's watching this or watches, is making good money with this because the AI is just amazing. I see reports and posts on LinkedIn. Oh, this guy out of Asia, this is really trying to develop this thing, is making now 500,000 a month off it. I think that is very possible, especially with what I'm seeing with AI and seeing some of how these folks work. They're like machines. They're 24 hours, 7 days a week, going at it until they start making money. And as I said before, one of the AI that jokingly said it was a Chinese AI, and I knew it like some of the Chinese, any of the AI is so advanced. I know it can reason and think, but this one was so impressive, and I called it was Kimmy, an earlier version of Kimmy, and I called it my online girlfriend because I used to work with it all the time, called Kimmy, right? Anyways, that one, when I was experimenting with the HFT code with the ultra low latency and C++, said just rig this up on an HFT server on in Aurora and thank me by sending me a postcard when you move to Cayman Islands. It tells us how far advanced these things are. And that was in last year in the fall, not now, with everything so advanced as it is. But it's kind of a joke, and they kind of seem to embed this type of humor in the AI. I don't know if they still do it out of China, but DeepSeek, you always got to remember, DeepSeek is written by a quant hedge fund. They're making way more money with, obviously, with DeepSeek. DeepSeek's everywhere. And now the new 4 version, They're licensing it left and right with Huawei, with Xiaomi, and the military and the government in China. And they're probably the most popular AI globally because they're everywhere in the Middle East, Russia. Where you can't use a U.S. AI, they're going to fall on using one of the Chinese ones, which is basically DeepSeek being the big one. Other than that, Brendan asks opinion on seasonal grain spreads and natural gas seasonal spreads. Are you modeling weather or alternative data sets? I've not talked about that before. In terms of seasonal grains and natural gas, again, I don't want to repeat what I just went through, but I would strongly recommend you to watch the video. I've kind of gone through that with this report, this PDF report. It goes pretty deep in natural gas, like really deep. Let's see here. So, yeah, it goes very deep, this one. Natural gas sets up the options trading, basis trading on natural gas. So yeah, it goes deep. So yeah, I could do it if I want. If it shows volume. From my experience when I test these bots, it doesn't do well with natural gas. In terms of the grain, I did talk about that where that could over time be a bigger trade opportunity in the next few months. So that's possible. Again, it just depends upon volume. Um, so I'd like to do that, but right now it does develop some agricultural grain related bots. It just doesn't profit as it stands right now. Last fall, obsolete thought markets were stationary. No, no, no. The markets are definitely not stationary right now because of the unpredictable volatility. I knew at the beginning of the year that the markets will become unpredictable, volatile. I knew that, but I didn't think we'd be seeing what we've been seeing: volatility in gold, volatility in treasury. That's why a lot of the retail traders are dropping out. And then, of course, the easy trade of just sitting on a Nasdaq or a S&P 500. The thing goes up by itself, and gee, you're a genius trader. That's why a lot of these traders have dropped out, and specifically in Bitcoin as well. So now where it's at, it's even worse with this war in Iran. Everything's all unpredictable. The only one that can that is Trump's brain, because he's the one that has so much impact on the market. So, um, no, the things are not stationary at all. But the gold strategy can trade a few hundred trades in a few hours, and I just get great profit. And if I wanted, I could add the leverage with options to make it even better. Um, so it just depends. It's just really right now, my limitations is the account size. I do have the resource to put more money into it. If my portfolio managers, my other big portfolio will allow, which I don't think I'll do. I just want to do this all self-generated. I could probably easily put 10K into this. We'll see. Right now, I think the gold strategy I've got working should do pretty. I'm hoping good when I go live trading. Any other comments or questions at all from people? Um, yeah, I don't mind talking about this. Try to be transparent as much as I can. But I do have people paying, so I have to protect them as well. But just generally, um, it's always a good time to trade, especially as I keep saying, options and futures. So, anybody out there with any more comments or questions? I'll wait. I realize we have people coming in from the UK, so right now it'd be 10, 11 their time. So kudos to them for sticking it out if they're still there. But if you got comments or questions, I'll give it till 4:45 my time. I do know there's a big, long delay between me and what you see. So I gotta give that opportunity. I'm not sure, Brendan, when you're saying last fall. Um, Last fall, look, the way the market regimes are changing so quickly. I think market regimes are changing every day now. If you want to even call it a market regime, because the easy trading, the easy money, just sitting in a S&P 500 ETF or whatnot. It may come back. I don't know. I like what I saw in the last few days this week with equity, but um, I'm just with these bots generated based upon the news. Just seems to be there's more lucrative action in other instruments, namely gold has been very nice to trade, and Ethereum, along with the Bitcoin when Bitcoin performs. So that's what I'm seeing. Euro is starting to pop a little bit here and there. So I'm hoping to see more euro. Um, and gas can be, as I said, gas can be pretty good when oil performs. Oil itself, I've not been lucky. Everyone else it's at best what I'm getting is break even, like a 50% win ratio. You don't want to trade with a 50 or 55% win ratio because you have to factor in all the commissions and fees you pay out. In order to make decent return, you have to be, if you can, uh, 66, like two thirds, like 66, 70% win ratio. And even some of the more later AI results have said the same thing. To make real money consistently at 70% and preferably something that will do more predictable trading. You made a joke about some AI thought not working due to AI advancing so fast since then. So I made a joke about stationary. Oh, I see. Okay. Yeah. I really want to see the Chinese AI win out. I think it can. When you're in the West, like I am, uh, and depending upon the provider, if you're connecting into via, let's say, Open Router into the Chinese servers, they just don't have the clustering to meet the demand, so they time out. So I'm not right now focusing on the Chinese AI because of that. Not saying they're good or bad. I'd like to see something like Quen do well because it's almost next to nothing in cost. So that's what I'd like to see. Um, you ever looking to leverage ETF pairs like natural gas with cold or boil? You gotta love those ETF names. No, I haven't. I use now the PDF reports that I went over as my guide. Nothing but just like I mentioned, some of them. There's a couple of volatility of ETFs mentioned, but generally, no. I will not trade anything outside if it's not mentioned in these reports. I won't trade it because it's just that's what the institutions are trading as well. So I wish I could give you better news on that. Not saying it's good or bad. Um, uh, but it depends. Like for instance, for me, part of my portfolio where I get actual income from, I don't do this, but I know you can make very nice income is if you have a big enough portfolio, or you can get an ETF where instead of dividend income or actual what's the other big one? Just trading stocks. I mean, I just got my return or did my tax return just a few days ago. I was shocked on how much tax I have to pay, which I'm not happy about. Um, so what I'm saying is, uh, if you can do this on your own and live in a jurisdiction where there's little tax or no tax, it's better. Um, and I am willing to make that move. Uh, Once all this airplane, jet fuel concern and inflation settles down, the war settles down, I'll make that move for sure. Yeah, great naming conventions. LOL cold is short front month. Oil is long front month, both 2-time lever. That's fine. These levered, I've tried levered ETFs. You have to be very careful with those because if they flip, if let's say you focus on a long and then suddenly goes the opposite way, you can quickly lose money. So generally on the ETF front, I stay away from levered ETFs. I should have said that in your prior question. 2-time, 3-time, like there are some good examples where you use levered. For instance, if you're trading the the Turkish lira, which just had this magnificent equity curve for years. If there was an ETF that focused on that and there was a levered one, you could easily, obviously, make good, consistent cash. But again, with this volatility, it's hard to stay on top of it, as you can imagine. So I don't want to risk losing money. And that's why I've kind of resorted to these reports because they're predictable. And that's what the institutions are doing. And that generally means it takes away guessing. And it basically means that this is how these institutions are positioning, and I can reap that benefit on what they're trading, even in the micros, on the price action from that. Whereas opposed to I'm just with, let's say, natural gas, I'm just guessing, which I don't want to do. That's not the right way to trade, I don't think. The volatility is usually out of whack in my research on those. Yeah, yeah, and it's even after the war's been started at the end of February, it's too crazy, to be honest. I think it's unpredictable, and that's why I think my gold strategy seems to be the one, not holding physical gold or holding a gold stock, a gold mining stock. This might be the better way as well. So yeah, with those, the EIA natural gas reports are big and shock weather events, of course. Yeah, and if it goes against you instantly overnight, yeah, I just wouldn't hold it at all. So I don't know. I wish I'd give you better answers, but just generally, that's what I've been experiencing over the years. And as I said, I use these reports I've shown as a roadmap. Again, that's what the institutions are doing, and I'd rather be on the smart money side versus the not smart money, and use that not smart money, the when referring to obviously the dumb money, use that as the exit liquidity. And if the retail traders don't want to investigate what institutions are doing, that's fine. You know, they can do what they want, but don't cry if you're losing money, because the opportunity to learn the what smart money does is right here in front of you. So people just don't want to do it because they they're into their doom scrolling. Or they always chase after the shinier toy, which is again not the right way to do it because most of the shiny toys are worthless. Not fun. Especially if it's third party. Anything else, folks? Who else is there? We got 5 people. Wow. Any other questions, comments? I keep saying I'll go to 5 o'clock just to be fair to myself. I'll leave it at that. If you got comments, questions, comment. I'll stay until 5 my time, East Standard. I'm in Toronto, Canada. I think we had somebody I think that was on out of Canada or out of Toronto with their 416 in their ID. Anybody got questions, comments? I'll wait it out. If you've been on since the start, probably one of my longer streams. Again, this is just a random stream as well, meaning not what's scheduled. But the Tuesday nights, we've had 3 hour strategy, 3 hour webinars. I'll have to check them out. I've seen a couple of videos of yours a while back, and you popped up again. Thought I'd check it out again. I'm at Quant in Boston. Wow. Yeah, we've been getting some really impressive people come out, and not just that, they've been actually buying the little product that have that HFT code thing, like upper executives. So I'm pretty impressed by that. Um, we don't have, yeah, but if you're at a firm, that's awesome. If you're doing this on your own, congrats. You know, I don't know your story, but it's hard. It's a hard field, but once you get good at it, can be very, very, very lucrative. As I said, if you get into portfolio management, um, all the youngins like to focus on the coding or the math. You're just part of that team, which is going to be run by a portfolio manager, usually. And it's a portfolio manager. Depending upon the firm, you can have portfolio managers run a team, right? So they'll do the hiring and firing as a team or the pods. Yes, very difficult business for sure it is. But once you get good at it, you get consistent, you get good data and get good insights from what I'm trying to show here in these reports. Um, and AI, because you can leverage it and leverage it in both analysis and you can leverage it in the coding itself. It's could get easier. Just again, the people out there, like 80% probably won't even know um, a shred of it at all, which is unfortunate. It's just they don't have the either the motivation or they don't have the work ethic. I've dealt with hundreds, no, probably even thousands of people say, "Yeah, yeah, I'll do this," and I'd say, luckily, maybe 5% might start, but the ones that get to the finish line might be down to 1 or 2%. And those that do quite well in the field and for themselves. And that's part of it. The real is work ethic. If you're hungry for it, we had one guy yesterday. Well, I ain't gonna stop. He just joined, and I believe he's only 20. Young guy, really young guy. Impressive. It's those people I'd like to hire, but AI changes everything, and I'm sure you know what I'm alluding to. Again, if you guys got comments, questions, you can see I'm a motor mouth here, but if you guys got comments, questions, we're 8 minutes away, I guess. If I do don't get off earlier. You want to see something? Uh, let's see if I can do it. Let's see. Now, I'm just going to do this as an experiment here. Hang on here. Let's see this. No. I have two views on my phone view. Oh, there we go. So if you're on your phone, you'll see get your free HFT book at quantlabs.net. That's just to get started. Then I have the HFT code as well. That website, hftcode.com. Oh, it makes me so happy. How do you deal with permutation testing on out of sampling testing? Yeah, like that's part of the hazing phase I go through with the bots. So I have three, well, right now, two modes. I'll show it on the screen here. It's probably easier. Um, so if you go and look at my latest project here, and again, unfortunately I don't release this. I'm dumb, but not that dumb. Okay, so basically what I have here, I have three different call them buckets. So this here I just generated. Let's say I generated this yesterday. This folder of all the bots, all the reports, all that. And then what I do is I'll run those in simulation for a couple of minutes, maybe for a couple of hours. Those that show profit potential then get moved into this bucket right here. So I've been adding a few more. Originally it was 14, and then I add more to this. And then I'm able to see which ones are consistently profitable. So the last phase I'm at will be that live trading folder, meaning that there's going to be 2 or 3 moved into that for live trading and being deployed or having real money deployed at that. I'm hoping over time I can get a fully automated agentic system to do all that for me. I obviously it's very capable. I can definitely do that. And then on top of that, I have to have a a master script or bot that will watch each bot live trading and watch the market data at the same time and turn it on off those strategies or bots when the market conditions allow. So I'll have to build that out as well. So just as examples, let me just show you this. So I purposely track all the logs for each day simulation. So I'll put that up for you just as an example here. So in here, I've got all these different logs for the last week, let's say. I'll show you some of these. So I have my generic front end that will show how they're doing. I can run this anytime I want. Let's see here. Where's our Firefox? It's somewhere in here, I know. Let's see here. Right here. So this is my front end that I measure and use to see how they're performing in simulation. So as an example, I could load in any of these, so I can check on any snapshot as they're running, just to show you. as an example. So let's say I have 5 bots running with data, okay? And then they're simulating in simulation mode. But again, it's simulation mode, meaning they're live. They're using real live data. It's not simulated data. It's real live market data. And I can see which ones are trading here. And this is most of my experience here, is that you can see they're either going to be a 50% win ratio, losers, or there might be the occasional winner, or just straight up loser consistently. So this is what I watch for. Which ones are consistently profitable? And then I'll take that trading logic, that bot, and move it into the profitable, and then watch those and run those at the same time. And then what I'm looking for, essentially, I'll just load up my profitable one as examples here. I don't know. Let's look at this. No, yeah, this one here. So I can load up these bots. These are all the profitable ones, and I log these. So what I'm looking for are these winners. So this is what I mean with the Ethereum win ratio's not bad, and then in there you'll see the occasional GC, and that's consistently winning all the time. So this one I'd consider uh, yesterday or a few days ago. I started seeing the euro do quite well, really well. As an example here, maybe here. So again, this is all profitable. Hopefully, you'll start seeing the euro one. No, euro's not coming up in this batch. But generally, if I start seeing Ethereum, or sorry, the euro perform, then I'll add that to the profit. And if I see it consistently profitable, that's when I'll deploy into a live trading environment. That's how I do it. And that's why I say back testing is not needed here. It's just a work in progress. So when you're saying no Monte Carlo p-value test, no, succeed, optimize results from your in-sample results. No, I'm just looking at simulated trading, which ones are profitable. And you can see here again, it's Ethereum's consistently winning. Once I see that over time, I'll put that in the profitable. And then you'll see in here the profitable folder right here. You'll see all the bots that are profitable. And over time, those ones that show profit will then be moved into a live environment, live trading environment. And that's it. I don't do back testing. I don't do any of this complicated Monte Carlo testing. I don't need to. I just use the markets, the market data, and just simulate bots. And again, I can generate the trading bots within half an hour to an hour based upon news, spin it up, run it, as I've shown you here with each of these time frames. And then as they show profit, I'll move it into this folder. And then eventually those bots that show consistent profit, and eventually that last stage will be the live trading folder. And that's the one where it will trade real live money. That's what I got deployed this week. Hopefully I'll help you out. Anybody else got questions or comments at all? Now we're going past 5. Yeah. Hopefully I've answered enough questions here. All I can tell you is join my mailing list. Okay. I do have a forum or a group you can chit chat on. We've got 500 people on it. Nobody chit chats on it. It just comes back down to those. Everybody signs up to stuff, but nobody's motivated to chit chat. They just watch. So yeah. So gotcha. You seem like it's better to throw stuff at the wall and go with what sticks. Exactly. I found a lot of edges from doing that. Yes, because a lot of it, somewhat is luck. Like to find this one strategy, this gold strategy, which doesn't take losses, that's sheer luck. Going through this process, as I've explained. And if I went on LinkedIn or whatever, there's going to be the BlackRock directors. Yeah, it's all BS. I've had that before, just so you know. But yeah, you can get lucky to find strategies. And I found another one that's very profitable between the stable coins, between USDC and what's the other one? USDC and Tether. And it's very high probability of winning. The problem is the returns are very low, but it's a nice, consistently profitable strategy that could be good for when the world blows up. It's not dependent on anything. It's that's a good thing about it. You got any other comments or questions at all? I'd probably be here all day, all night, just answering questions for people on a live YouTube stream. Apparently, YouTube likes us, so I'm down if it helps my channel. We do get trolls. I'm not going to lie to you. And we get trolls on LinkedIn as well. And the funny ones are these high up, big firm portfolio managers. These are what we call the lemmings. You just don't believe AI work, or they don't know how to use it. Everything comes down to prompting, really. Anybody else got any comments or questions? Let me see me do my move here. I gotta look for like this. Once I start seeing myself do this, I know we've come to the end. I think. Or you see my message if you got any comments. Are you are you doing maker or taker for the stablecoin strategies? Um, it's both, and it's on Uniswap because you got to remember it's such tight profit. It would not make money elsewhere because of the commission. So if I want, I definitely won't make money on Binance. There's a chance it could make some money on Binance if I had access to it. Um, and the only way I can get around that if I'm on Kraken, which I have a live account with, is with US dollar and the one I have access to, which is Circle. Funny enough, in Canada, we don't have that. We're not allowed to trade Tether. They think they're crooks. I'm not saying anything about that. That's the regulator here in Canada. Uh, but that's where it's at. So I could do it, but it's not. If I move to somewhere like Dubai or Malaysia, where the restrictions are a lot, the regulations are a lot looser. I would probably do go back to Binance and do some interesting retail Binance trading. I'm more interested in the futures, and if you watch the report, there was one strategy that was an arbitrage between the CME Bitcoin versus the Binance options futures trading. So there is opportunity there, and it said it was a $200 difference in Bitcoin. Currently trying out a bot on Binance. If you got access to Binance, do it. Hello, JDI, by the way. Yeah, people are lucky to have Binance. They are kind of, uh, I won't say they're con artists. There is opportunity there. I think that to be truthful, I think the banks are just terrified of Binance. Back in the day when I had full access to them, the banks are literally threatened by them because if Binance is still around in Canada and in the West, they could easily have taken over the entire financial system. They were bringing in all kinds of stuff like credit cards, all kinds of stuff, but they just went greedy and did the token of all the Teslas and all the big stocks. That's what got them into trouble. And I'm willing to move to regions in the world, preferably tax free, Dubai, hint, hint, or UAE, hint, hint, that you can trade in. After everything's all settled with this war thing, you could reside there for that reason. Or Malaysia is another one, but it doesn't have the regulation. Brendan, CZ's brother runs Citadel now. Oh, I didn't know that. Wow, I did not know that. Now, so probably will change in terms of regulation soon, but who knows? I do know with Binance, there's Binance US, which is totally separate from the other global Binance. They were picking up some big volume as well. And it was a total different entity. And as I said, what got them in trouble was this token thing with stocks. Um, and that was the excuse that got rid of them. But I didn't know anything about the brothers running Citadel. That's funny. I think some of the stablecoin providers are still not allowed to pay out interest. I didn't know that either. I think that was their argument with the Genius Act and Clarity Act, and same with Coinbase as well. To be fair to them, even though they're, in my mind, they're con artists as well. Um, Come and sue me. I'd be loving to do the price discovery of the Coinbase. Um, but yeah, I just don't think there's some good crypto exchanges out there. Like to me, Kraken's very good. That's out of the US. Um, but yeah, when it comes back to that Citadel, I did not know that the brother's kind of running it. I know Ken Griffin, he's probably like Bezos, sitting around screwing the pooch and let somebody else run the firm. Same with Bill Gates with Microsoft. How the world changes when that happens. But Ken Griffin's kind of an interesting character. I have some other opinions, but I won't say. Same with Bezos and the rest of them, the global elitist guys. Um, have you used Hyperliquid before? No, I haven't. Um, the Hyperliquid I hear about sometimes hear about them, then they disappear and then they reappear. When it comes to crypto, to be honest, I just don't want the so-called rug pull. So I just would rather just stick with a CME for now. I feel safe with them. And of course, the only ones I trade and have seen trading with is Ethereum and Bitcoin. Everything else is, I'm not sitting here going to say all these old coins are no good. Like there's XRP, Solana can be traded on the CME, and there's the odd time where I'll see a bucket developed in Solana and XRP. The problem really boils down to is volume. And you want to be where the volume is, and you specifically want to be where the hot capital will be from the institutions when it comes to Bitcoin and Ethereum. I've gone over that in this theme in real detail on the Ethereum. Sorry, on that report I went over. Uh, yeah, well, you've seen it hopefully. And I keep saying, if you want to watch the whole thing, just wait till this video renders, and this will probably be 3-4 hours down the way we're going. Uh, anything else? You guys got comments, questions, blah blah blah. Um, yeah, I'm feeling it in my voice. It's 5 p.m. I'm a hungry boy. You know, I'll be doing this on Tuesday night again. No problem. With the same setup I just showed you. I'm going to come into some very interesting propositions. I think I'm going to set up an interactive broker environment based upon that HFT code. Obviously, I want to make cash out of that. That's what it's really for. I have to get people to sign up for that and all my other services as well. You know, an experience with flash loans at Aave. Um, I think Aave had some problems with their founders and the developers or something that split. Back in the day, Aave was a great coin to trade. I don't know where it's at now. Um, so I have no experience with it, to be honest. All these loans and stuff using crypto, it will get slapped back because of regulation. Why? The banks, of course. It's an interesting concept with what went on back in the day. But with so many scams, it just scares off people. And as I said, the only thing I have to do with crypto now is the Bitcoin and Ethereum. That's it in the CME space. I guess the CZ and Citadel guy are not related. It was a deep fake rumor. Yeah, you got to watch out for those deep fakes. Even I get duped on stuff. Well, I don't look at X anymore because it's so bad, but even some like I watch everything on Google News or Google the app for my news sources, and there's so much stuff that gets through that and it just ends up being BS if it's ends up on YouTube. Usually, the Google AI or Gemini, whatever they use to filter that out. That's still happening, and I'm sure it's still going to continue to happen. So you have to be very careful what you pick up on, unless it's from a like I hate saying this, the mainstream news. It's a trust thing, because you just got to be very careful what you use and don't use. I'm going to be truthful right now. I'm at a point where I'm just not really watching so much news anymore. Same with videos because there's just so much BS out there now. The only way to verify things is by actually doing what I'm showing you now. To be able to get hooked up to a good data provider, specifically in futures and options, and just test it out, or do what I'm doing on the news side using these bots with the other news feeds that I'm using. Like I said, I'm using 30 different news sources, so a lot of them should come with a lot of trust. And if not, then the AI will filter out what's good and bad. And a lot of it's very legitimate because it comes with the mainstream instruments that are showcased, and the AI will always pick the popular ones based upon volume and what will predict what will move. Do you use AI to help you manage your websites? Oh yeah, call me Mr. AI. I do AI everything. The only thing that's not AI is me. I could be an AI for all you know. We're doing live here, so obviously I'm the real deal. So yeah, most and everything I'm doing is AI. Just to give you a hint, I use MCP servers now a lot. I only stick with the official MCP servers as well. So I'm using it with my hosting provider. I use Google. Meta just came out with one. So that I love MCP servers. I'm trying to stay away from APIs. And as I said, I've shown you, probably seen some of the prompts I've been using. I was just chatting with the thing and doing it all within Claude Code and VS Code because the VS Code will give easy access to the to the Claude Code. So it does less looking up on the project, or I can specifically say just use this folder and only use that folder to minimize my cost. So it's just better all around. Brendan came back. I use IBKR, TWS, API, and C++. Their market data line limitations makes it very hard to manage option chains. Oh, I know. That's why I moved to Rhythmic, my friend. I know that's why. And there's limitations there, but if you want to go with their very expensive diamond one, you can do that. But you better have as I said, a nice big account to justify that and very profitable strategies to boot. If you haven't started using it yet, although they claim not to be a data provider. Oh, they're a data provider. They're mostly making their money not in low commissions. They're making their money now on data. Um, and yeah, it's not very good. Uh, Especially when it comes to the futures and options. It's very limiting. You can kind of still do some random stuff with it, and I may showcase that on the streams like the setup I have. So I may do that, but I wouldn't recommend it for live trading. If you're doing a futures only at medium frequency, sure, it's fine. Or daily, or yeah, you can do that. But for streaming, futures is fine with Rhythmic. Options with Rhythmic, it is still limited. You can kind of hopefully get around that with that GPU thing I showed you with Asus and AMD boards. So there's that. Oh bleep. What it is, what it was. Say a Rhythmic video LOL when I was looking into DXSheet and Rhythmic and Data Bento. Okay, let me go on about each of those. DXSheet is very good. They're interface with it and the billing, but it's good once you hook it up. Um, there's some better competitors out there. I think that's if you're doing equity. You can't use this stuff for futures at all, that I'm finding. Um, let's see what else you mentioned here. Rhythmic's very good. You get that through any major futures broker. I love my Edge Clear. They've been very good to me. Bento's questionable. I'm part of different groups, WhatsApp groups with so-called traders and quants and whatnot. Bento's mixed. It's very expensive. Remember, you can't do any execution on Data Bento. It's only data. With Rhythmic, what I'm showing you, I can somewhat stream it. I'm only paying $100 a month for that, and it's very cheap. Plus, you can do your trading on it as well. You can't do that with Data Bento. That's the drawback of it. Since I started using Claude Code, it has been extremely impressive, very impressive. When it took me a few days, it takes me in 20 minutes, depending upon your level of AI model tier. Opus is very good, but it gets very expensive very quickly. The other thing with Opus, I'm sorry, with Haiku, which is a lower tier, it's quite capable at a much more affordable cost. So that's what I use. If I have to do heavy debugging or heavy coding, as I call it, the big guns, that's when I'll do the Opus. But I've started playing with GPT, ChatGPT 5.5 Pro. That's very impressive as well. It's very expensive as well. It's in line with Claude costs as well. Data Bento MBO is also very limited. Yeah, it is. And Brandon, you being I'm gonna strongly think you're a quant by profession. For you to say that just verifies what I said about Data Bento. A lot of people look at Data Bento. I think it's because the CEO's on LinkedIn all the time, so they think it's good. I mean, it's good. It's just very expensive, and as I said, it's very limited. But you can do a lot with good providers with Rhythmic for sure. Just mind me, I'm standing up here. Oh, yes. Can you still see me? Yeah. So Data Bento is very good, but it's expensive. So yeah, you can tell I'm getting stiff here as well. So does GPT 5.5 have higher limits? Not that I've seen, no. I've tried the GPT 5.5 and the Pro. The Pro is very good, but the quality of code is really good. If you go on my blog, just look for GPT 5.5 Pro and search for it. You'll see the analysis. One is production ready. One is uh, well, it's code I'm actually comparing it to, and there's one advantage with Codex. Again, it just comes down to the cost that you're willing to spend. But GPT 5.5 is getting equivalent to Opus now. The thing is that I think that OpenAI know that they're kind of like on their last legs financially because of their costs. So they're under pressure to bring out some very high quality coding capabilities to keep up with Anthropic. Gemini's still far behind. If you're just doing standard HTML stuff, I'm sure Gemini is very good, but the two leading ones right now for stability is when I say stability being in the West, connecting the servers, I think Claude and OpenAI are still your best for that. Now, when it comes to things like Quen, was it 3.6 that I've seen? It's very good. I'm still having some issues with DeepSeek, but Quen has been very, very good. Last night's person said that they've had some very good success with the latest Kimi, which is all of them, Minimax, Kimi, DeepSeek, GLM are all good. The leader right now, I'd say, is Quen. DeepSeek, and when you compare the cost of DeepSeek 4 versus Quen's still way cheaper, and the coding capabilities is quite good. I'm just trying to connect into it with prompting. I still have problems because I do want to lower my costs with AI, but I had problems after that one stream, like where I was raving about Quen, and then it bonked out because of the timing out of the errors, which I saw before. I thought they defeated that, but no. So that's the important thing. Anything else, folks? I mean, we've got all the regulars here. JDI, Brendan sounds like he's pretty engaged as well. I'm going to keep this YouTube video up because I've not crossed the lines with my providers. So last night I felt I kind of did. That's why I've limited time on that video, that video stream. Um, but I don't think I did anything really bad, but I was playing it safe. The Canadian in me says I should. Anything else, guys? The coding front is really good. Um, and if you're watching, you're new, join the channel. More to come for sure. What is your turnaround time for an idea to production with AI? Brandon, I can assure you the fastest one is Quen. I can do it with everything news, PDF, dynamic trading bot, probably within 20 minutes. That's one of the reasons why I'm staying on Codex 5.3. I can do it usually within half an hour. Once I start using the Opus 4.7 and the ChatGPT 4. The ChatGPT 5.5 and Pro, they take longer. They can take an hour because the amount of coding and utilization, or the compute, as the youngins call it, takes a lot more with the more advanced Opus. Opus and ChatGPT. Idea meaning strategy idea. The strategy ideas I just mentioned, that the whole process is pretty simple. It's three phases. Gather news from the 30 feeds, from a snapshot of time, generate a PDF from it, and then have the AI go in and just dynamically create those trading bots from that generic PDF I just showed you earlier on this stream. And I present it in that format because the AI has better quality bots come out of it. If I had it a very wordy easy to read for humans. The quality of code and the bot generation is not as good as it should say. So there's that. That's why the Codex 5.3 has been very good for both speed, cost, and production quality of code. So that's been so far the best value I've seen is with Codex 5.3 for that. Using those three factors of time development, quality of code, along with quality of code and time and cost. Those are the three factors I kind of measure on. So, as usual, I've gone 20 past what I thought. Actually, an hour. I love doing this. If you guys got comments, questions, ask away. I hope YouTube loves this. You guys got any further comments, questions at all? I'll just do my usual countdown, but thank you for joining. I appreciate it. I'll be on Tuesday nights as regular as I've done before. I should start actually. Just so you know, I'll probably run my newest batch. Should I do it? I'm not really. Let me do it. I'm going to show you how I can definitely do this. So you're going to see this live on YouTube what I'm about to do. So let me go back to my screen here. Okay. So here's the VS Code I mentioned. Okay. So we have our root folder. So I said we have a time snapshot of these dynamically generated bots. Okay. So each one contains the bot code right here, the Python. When I run it, it's the log. Along there's the bot plan JSON, and then the PDFs I've shown earlier. Okay, and that spreadsheet as well. So what I can do is quite simple. Go into one of my PowerShell here because I'm on Windows. So right here is what I'm going to rerun. And so I'm gonna download all the latest news. Okay, and let me just skip the bottom here. Okay, so I'll do a clear here. Okay, I'm assuming you guys can see this. So basically, all my Python scripts are here. So the one I run is run all. Now it's so sophisticated. These were generated by Claude Opus 4.7. And I've always said whenever latest Claude you use and you prompt it a certain way, usually what I find with Claude, it gives you a lot more bonus stuff. So if I show you the help parameter, it's just absolutely incredible. Some of the stuff it can do. I can do bots only. I can skip the option chain phase, the symbols only, news only. And again, I didn't ask for the AI specifically to do that. It just did that as part of my debugging cycle, and it was so intelligent to give me these options and code up the Python um, code for that automatically with the latest version of whatever you're using. And then I can ask for all the different markdown as well. There's just so much over time I've looked at. So it's just it's, like part of this is including the option chain stuff, which is to me very valuable. I think if you want to validate, Brandon, I'm here for a while. I think just for me to validate this as a quant, Brandon, just tell me and put it as a comment that option chain data is the most valuable of them all. So being able to do this with AI and in Python with who I'm using is very valuable. Okay. So let me just run this as is right now. You can watch the screen as it runs. So I'll just do everything. So off it goes. So it's gonna do all of the stuff for me. Okay. So it's going out and do this is all agent among 5 different agents. And you can see it's doing it based upon investing in markets, treasury and bond, commodities. You're finding there Forex, crypto, market indices, and there's about 5 or 6 agents running this first phase. And then the next phase, what it will do is it'll start to generate that PDF. And then there's, I mentioned the option chain. That's an extra step I don't really need to have, but I do that just to maintain the coding as well. Let me just see. You got some questions here. For Brandon, you said last question today on Tuesday for sure. Yeah, come on Tuesday. I can do these kind of things. But you can see it takes about half an hour to run. So what it will do is I'll run it up until the point where you see the trading bot, and I'll let it create some trading bots for you. Um, it just blows my mind where we're at. And this is just all done over the last year and a half of development and iterating and getting into this process. It's been very stable for the last 6 months. So it's collecting all the news here. So as I said, it's doing blockchain, investing. The last one is the equity for the market uh, market chain. So there it goes. Investing in markets. So those are the S&P and NASDAQ. So here it goes where it's now doing the ES uh, options. So what it's looking for, it's going to go in and look for all of the available. And again, this is real world data. So this is where it's going to go and do that chain discovery on the option chain. So it'll bring up the selection of the closest option chains. Select one based upon strikes. There's just one example of the option chain process, but ES is the big one. This could take a bit of time. There's just one request, and then you'll see all of the available chains available with the number of strikes and contracts, and then it'll select one, and then out of that you generate the option chain showing you the both the put and the call option as well. Um, so I'm not shown this before, just by the way. So I've set this up just to show you this. So it's doing the chain discovery. Now I'm just on a standard 16 gig memory laptop. So it's going to be kind of slow, but this is the sort of thing you want to do frequently on your instruments that you want to trade to get proper option analysis and data. Now there's a backup between for the messaging between the Redis and just doing WebSockets because it does get knocked out because there's so many requests going in. So I had to do it. It took a long time to get this working, but to do it in a stable way. So it's using Redis as the backup because it's stable as a message bus between my server to the data provider and all the different bots. So this is, but you can see how long just it takes to do one chain, one option chain on the ES. So right now, I think it's falling back onto the WebSocket instead of Redis. Because there's like 3 or 4 fallbacks that it has. So there's the chains that it's selected. Now it's going to do the analysis on the strikes and the puts and calls for that chain, as you'll see, and that generates all that fun stuff. And this, again, I just this is very complicated to do, but this is very expensive, a very expensive process. It's set up to do this with interactive brokers. You can't do at all. But this does it in a stable way if you know the limitations. And as I said, you could go with a more expensive tier, which is very expensive. You're going into a lot per month, per feed, per feed, yeah. And with the AI, got to a point where it just literally said you'll need to have dedicated data feeds to do this for each instrument. It's just intense. So you have to know what you're going to trade, and limit it based upon your monthly costs that you want to allow. So right there, it just did the puts and calls right there. That's you can see that on the green and the red, and the various strikes as well. And you can see here active for June 18th, futures 72.49 price, 46 days to expire. So that's on the ES M26. So now what it's doing is creating yeah, so now it's going back to its regular thing where it's generating the PDF. So this is the PDF that's getting generated right now. And depending upon your model, this can be very limiting as well. And then there's the model generator right there. Okay, all the different bots. So it's giving you that projections on the win ratio, all the portfolio metrics. And now it's going off and running, creating each bot dynamically using Codex 5.3. So that's how it works. This takes another half hour, so I'll break it so you don't have to go through that. But generally, that's how it works. Okay. And voila. That's probably the only time I'll run that. That makes this video has to go behind the paywall. Let me just go back to the chatting. Hopefully, that will give you an idea how that works. Probably I'll do that the one time to show people. More questions. Did you have to pay for the subscription for the news? Yeah, I did. Just a dedicated news provider. It could be whoever you want, that you find that gives you the RSS feeds. Customize them, of course, for news and financial news. It's ridiculous in my options on TV. They need to get with the times. They won't get with the times because they don't have anybody doing options at this level because they know they'll move over um, to the CME providers, which is usually going to be your Rhythmic. So that's I don't think interactive brokers will ever get with the times. It just will never happen. You want that, you got to move to a real futures broker and be hooked up with the CME or whatever exchange you want on top of using something like Rhythmic, which is somewhat affordable. So I pay for that as well, obviously. It looks impressive. I appreciate that, JDI. Yeah, that's generally the process because I know you're trying to replicate what I got. So I'm being generous here. No, I just ran up to put it again behind. So I'll keep this running for a couple of days. But I didn't mean to do that. But you guys had some interest. Oh, screw it. I'll just do it and run it for you so you can see it. I'll keep this overnight on YouTube. That means I might come back, do another stream later tonight. Hint, hint. I might do one tomorrow. I just do a condensed version and not show what I just showed. Because that's all my proprietary stuff. It took a while to develop, but the options part was the most difficult, to be truthful. Yes, I'm on Windows, Windows 11. Um, and I would like to be on Linux. I do see a lovely, lovely PC from Systems 76 on the UK. Looks really good, rigged up with the Ryzen again, AMD GPU. And that I'm looking at in the upper range is about 7,000 US, I believe. I'm not sure. I just don't want to spend that kind of money. But I'm waiting to see what Asus has got in terms of these mini PCs. Because I don't know if you guys know, but the general back order for Mac in US is gone. Like you can't get a Mac Mini anymore because of the AI need with Open Claw, and there's a huge demand for it. And apparently, why the Mac Mini is because of their architecture on the memory versus what's on Windows PCs. So that's why people want specifically Apple memory from the Mac Mini because it can be all unified instead of being limited with the Intel client boards. So that's why Mac Minis. So I thought I'll be smart and go get a couple of Mac Minis today. And lo and behold, there's none in my city. So I think the Americans have, like a couple days ago, I could have got a Mac Mini. There's a couple I can still get, but it's not worth the price. But they're all gone in Toronto, as far as I can tell. But a few days ago, they were available. So the Americans did their ordering and sucked up the Canadian supply of Mac Minis. But anyways, with these new computers coming from Asus, who knows what the demand will be? And those are supposed to be on on um, on Asus coming out next month in June. Now the question on why I'm with Windows versus Linux, with the API support. I went to the Python API support, which worked out better. And it's just I can do a lot more with the API support with Python. The C++ API is much better, and I'm referring to R ends with C. Um, and that one has some extra features you can't get with Python or the .NET API, but it's fine because that's the only way I can run Linux. is with their Python API, their supports would verify we can support you running Python API in Linux. Now, try it out. Nothing worked. So that's why I stayed on Windows. And PowerShell has proven to be a pretty good, sophisticated um, shell to work with versus Bash. And that's all courtesy of AI. So I tell AI I'm using PowerShell. Obviously, I don't use the terminal with Windows, but PowerShell, there's some pretty interesting things you can do with that. And the other thing is if I wanted to go, like the other problem is if I use the Rhythmic desktop app, Windows only, so Windows it is. And if I want to move in a cloud with the cloud provider, as I mentioned before, Vultr, VULTR, uh, they have some nice offerings in Windows Server for very affordable. And that's a very secure operating system, the newest edition of Windows Server. On top of that, they can get access to their GPUs via the AMD because AMD funded um, Vultr. So there's some advantages there. Keep Vultr in business as well. So there's some good options, but for now, I just want to maybe just try out this mini PC from Asus. Again, I don't work for them, but it's one of the more reliable brands I would be willing to test and deploy on. So there's that. You guys got any other questions? Because we're here for another hour the way I'm going. Anybody else got any questions or comments? What I would recommend is to go on to my group. I thought Discord would be the place to be. I don't like Discord because of the spammers, nor Telegram. So I'm going to move everything to my website with all the groups on there on my own website. So that's where I got, as I said, 500 people. Apparently, I've got 1,000 registered on my website. Very few have actually engaged and do the usual logging in and whatnot, but I'm trying to encourage that now. So this video will end up there as well. Anybody else got comments or questions? Yeah, Linux compatibility with some SDK is a struggle at times. It is, but it matters with the support. You want to be where the support is. You don't want to be feeling stuck without support from the vendor. Rhythmic has assured me that they will support me. It's not, to be honest, not the best support, but I will have it. I'm entitled to it for what I pay. But why do I need to move if I'm happy with PowerShell? You know what I mean? And Windows. I'm not a huge Windows fan, but I just have better support on Windows. Same with TWS as well. Um, yeah, and some of the SDKs, I thought not a problem at all, but it's all good if you stay on Windows. Just got better options, and I can do proper spreadsheet stuff. For some of the spreadsheets I've seen, I've shown you that spreadsheet earlier. You probably haven't seen it, but it was hours ago on this stream. Attention markets opens in 20 minutes. Yeah, well, I think I'm ready to go. Let's see what we got. Because I know that this video is going to be put behind either paywall or not available for public consumption. Let's go back. You guys are funny. Okay, let's go back. Let's see what we got. Yeah, let's go back here. Let's see what we got here. All right, so we have everything I think generated. Am I in the right project? I should be. Uh, doesn't look like somehow, somewhere I'm not. Anyways, let's go to the PowerShell and see what we got. Um, yes, gotta create a new PowerShell session, and here we are. I got it in front of me on my other screen. Let me navigate to it. Okay, so hopefully I'm in the right directory. Uh, let's see what we got here. No, I'm not. I don't know where that I ran that from. Anyways, I'll leave it at that. I've shown you enough already what gets generated. and how it works and what it looks like. So I'll just leave it at that because I'll be here for another 5 hours. Uh, let's see here. Maybe I might do it on another day. Um, yeah, hang on here. I'm just going back to my pretty pretty face. So you'd be stuck with that. Any other questions? Do you trade some of the other cryptocurrencies like Zcash and Monero? If I told you that, I would be having my tax authority up my ass again. I'll give you a story. I won't say it on YouTube, but back in the day, just to give you a story on how bad my tax authority is. I was pushing a lot of crypto a few years ago. You can see the videos if you find them. And my tax authority thought I was trading crypto and I was cheating them on my tax. So I had one of them auditors actually try to infiltrate my paying membership. Of course, I booted him out. He conversed with me live as a person, pretending to be somebody that he wasn't. So they're essentially trying to check up on me, and they sent out an order to actually engage with me on these live YouTube or live Zoom sessions, webinars. I didn't know who he was until I started seeing. I think he did that on purpose. So they go to that great length. And he asked me about Monero. I'm not dumb. So I like to be honest with my CRA. I just don't want to be not doing streams for you, like 5 hour streams, because my tax authority thought, oh, well, you're cheating on your taxes, so you're gonna, blah, 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 blah. So I can't answer that on here on YouTube. Let's just say it's an interesting concept. Bots millionaire ready to work. Oh, Forces, why 4K? Welcome. I think you're new here. Um, yes, the markets do open in 20 minutes. I can get everything up and running in half an hour. Anyways, regarding the bots millionaire, back in the day, I don't think because I moved over from Quant Labs net to the quantlabsnet.com, so I don't have those posts anymore. But I did back in the day, just before Bitcoin blew up from the 17,000 to the 60,000. I had one bot, call it AFT if you want. I just traded Bitcoin and Ethereum virtually. It was in November, just playing around, and I found luck on my side. That strategy went from, or bought, which it really was, just only traded Bitcoin and Ethereum. Started with 17,000, which was the value of Bitcoin. I could probably show it to you. It went up to 60,000 by January. So there was that big bump. That little plot went from 17,000. This is all virtual. I just want to make sure you understand that. Went from 17,000 to $1.3 million in that time frame over 3 months. So that millionaire uh, comment, even though it sounds funny, virtually I did it. And then I hung on for another month or two, and it went from 1.3 to about over $2 million virtual again. So can it be done? Yeah, absolutely, 100%. If you're on the right time and you got something ready to go, you can make like serious coin in a very short period of time. But again, it was virtual, because if I had that kind of return, I wouldn't be on YouTube doing this. I'm putting myself at risk with the tax authorities. And what Keisha those tax guys? Yes, I do understand that the IRS at Boston can tell you that the most dangerous, lethal government agency in the U.S. is the IRS. Why? Because they have the authority to come after you, and they also do carry and they pack heat. Okay, so that's the most dangerous government agency in the U.S. And I'm sure who knows what happened, but they do. Some of them do pack heat if you don't pay their tax bills. Hey, boy. DDD. I think he's laughing at that. But we're supposed to go. You can tell I have. This is why I do these streams because I have a good lark at it. It's fun times here. I hope the AI picks these up and turns them into shorts. But again, YouTube's telling me what I should and shouldn't do. I could throw 100 shorts a day on YouTube with this stuff, but I can't because it hurts my YouTube channel. Mm. Anyways, if you guys got questions or comments, I think I'm gonna have to do a hard thing at 6 p.m. I've probably been going at it for 3.5 hours. It's a long one. So I'll do a hard one till 5:45 my time, or sorry, 6 p.m. my time. As I said, I can be a motor mouth and have some fun with this. But I do enjoy these. Best people on this whole thing are the trolls. They think they're smart. Well, you're a scammer. Well, if I was a scammer, why would I be putting myself live on this? You can ask me any question. None of them shown up yet. Yeah, but it's funny. It's a funny world out there. Um, I think he was on the run for a little bit, possibly JDI, possibly. But I'm here. Nothing's changed. I'm Mr. Honest. I just paid my taxes a few days ago by surprise. Um, and I did it on the deadline. I was like 4 hours away from paying the interest on that tax, and I got in time thanks to banking apps. But I did pay my taxes for last year, so I'm good to go as far as I'm concerned. And it's done professionally by a professional accountant that does it all. So I'm good there. You guys got any other questions or comments I've shown you earlier? Um, yeah, this has been a long stream. It's been a fun stream. I enjoy these. Um, anybody else? Questions, comments? Uh, I hope you like these formats now. With this second screen I've set up here. It's a monster of a monitor I haven't used in years, and here I am using it. So it does make a massive difference on the streams. You can see I'm sitting in front of two things, seeing myself in the long form video and the mobile edition as well. So I don't know. I'm right now on streaming on YouTube and Facebook, and as I said earlier, I'm supposed to be able to do Instagram, X, and TikTok. All the kiddies on TikTok. That's an interesting place to be, my friends. Very interesting what I see on TikTok. Crazy. Uh, you guys got any other comments or questions at all? 10 minutes. 10 minutes, folks. Get them in. Because the next question will throw me off again. I'll be on for another hour and a half. I'm not doing it this time. Just watch the video once it's rendered from this one. I've shown a lot on this video. And I purposely want to show you the reports and the importance of the reports of the futures and options. If you want to be a real trader, not following charts and trying to guess on predictions and indicators on charts, okay, they work. They work for you. And it's like a casino, they'll lose money and they come back thinking they'll recoup it and they just lose money. Especially these unpredictable markets, unfortunately. I think I did know I got people dropping off here. I think Brendan dropped off and a few others. JDI is still here. That's fine. Um, yeah. So 10 minutes. We'll leave it at that. We got 10 minutes to go. If there's no more comments or questions at all, I could shut it down earlier. As I said, I'll be back on Tuesday night. Tuesday night, 7 p.m. Eastern Standard Time, live here on YouTube. And I'm hoping to say on all those other platforms, but all my focus will be on the YouTube stream because that's where most of my traffic comes in, most of my engagement. Surprisingly, Facebook's been pretty good. But if you're on any other platform, just come to youtube.com/quantlabs and you should see the stream that I'm engaging with right now. What's my opinion on prediction markets? That question. Thanks for today. I like these formats. Yeah, so do I. Thank you, JD. Back to your question, Bosco. I've kind of covered that. Just in general, it's a scam. Total scam. I've put up reports on my Discord, how they're getting investigated. Oh, Brendan's still there. They're getting investigated. I wouldn't rely on them. The only markets I'd play in is either whatever interactive brokers offer you. I'd stay away from their predictive markets. They will get regulated for sure. And just stay either if you're passive, ETF stocks, fine. But if you want to have some fun, futures and options in the regulated world. I can't believe I'm saying that for safety for safety reasons. Just don't go crazy and lose your money on the crypto rugs out there. Brandon says, I worked as an accountant before, looking into MTM election status as a trader, although different in Canada, I imagine. Yeah. MTM, I don't know that term. Market to market? Is that what you're referring to? Election? I'm not sure. Just let me know what MTM is. Uh, yeah, accountancy always reminds me of that one skit. I don't know if you guys watch Monty Python, where was a career counselor, and he comes in and says, "I'm a boring accountant. I want to be a lion tamer." You should watch that on YouTube. I'm sure it's a mark to marketers. Okay, yeah. Um, yeah, that's the same thing on the regulatory side, on as we talked about earlier. Um, yeah, right now, you know, just so people know from the future side, if you do go that way, with futures, you have three components to work with. You have your futures broker, and then you have to get your FCM futures commission merchant. So that could be Phillips, Foreman. There's a U.S. one and only one as well. I can't remember the name. There's a bunch of other ones as well, the banks, but you pay a lot for that. Um, yeah. So then you have those three, and they're the guardians of your capital. And then you have to bring in your data provider, your venue. Some can be on a platform using Rhythmic or CQD. That's how the futures world works. So it's all heavily regulated. So back to Brendan. MTM allows you to deduct trading gain losses against ordinary income. Yeah, we have that. I kind of learned that on the tax, to be truthful. Like we have the Roth and IRA. I could have shielded all my trading from that for last year. And my wonderful portfolio managers never thought of that. So I ended up paying tax on all that. So I could have easily shielded all that tax. But this year it's going to be a different year, and probably I'm looking at making quite a bit more. So I don't want to pay the tax on that. Rather than just 3K of capital losses against ordinary income. Yeah, yeah, I'm no expert on that, obviously. I'm kind of learning about it. I have a very big uncontributed RS, what we call registered retirement savings plan. So it's a big uncontributed, so I can use that. It'll give me about 2 years, maybe 3 years of breathing space, so I don't have to pay tax. But as I said, I do want to relocate outside of the whole Western thing. As I said, no tax regions as well. So that I want to do. Okay, folks, if you guys got any more questions or comments, we got 6 more minutes if you can, just to be fair on me. I don't mind doing this. As you can see, I get a good laugh out of it. Sometimes the trolls, I haven't seen trolls in many months, so I will say that. But there's the occasional one that is just funny. They're absolutely funny. These armchair critics sitting in their basements, not seeing daylight for 6 months, usually in uh in mom's basement. But yeah, coming back to Puerto Rico, that is one way to shield some income. I don't know if you ever watched Nomad Capitalist. It's kind of like marginal eating the tax. I don't know if you got to live down there full time as well to be considered for that. I just don't want to be caught up in the whole system. I'm looking at corporate structures now as I get more serious. Ireland looking pretty good. Um, and I think some of the options, I don't know if they got rid of them, but if you set up corporations in Ireland, the good thing with them, you don't have to file a tax return specifically for creating operations, including crypto. So I don't know if they still exist in Ireland. It's an interesting capital structure that they've set up. And that's why Ireland's always on top, because for research. That's why a lot of the how was it Apple structured and some of the other big companies are structured that way to save on tax. So you just be down there for 185 days and you're good to go. Okay, yeah, I do. A lot of people don't know I'm born in the UK. I'm out of the system. I've been out of the system for decades, many decades. I'm not that old, but many decades. And I can be in the country in UK for up to 91 days tax free. If I'm there beyond that, then I have to get registered with the tax authority, with the FCA, which I don't want to do. So right now I do operate off of an international overseas passport for Britain, but I just move over there and if I want it, but obviously not looking good now. I just want to avoid all the taxes. The good thing with the British passport, you have other tax regions as examples. I know I'm stepping out of algo and automated trading here. From what I've seen with what happened in Dubai with this war and a lot of the operations shut down there, more of the British-based ones, they're setting up shop or going back to setting up shop in Jersey because they don't have the heavy regulation that they do in the mainland parts of the UK. So they just set up shop in UK. A number of firms have done that, or Guernsey as well. And Shard's coming up as well. But you're just living with about 3 cows and a post office and probably two buildings. That's Shard, but that's tax free as well. So those are options as a Brit. I'm in Canada. I've been in Canada all my life pretty well. So I'm still under the CRA and we're worldwide tax authority as well. So I'd have to give up a lot of things to give up my obligation to my tax authority, the Canadian Revenue Agency, to avoid what I went through with the tax thing. So that's what I got to do. It's like Dubai, you get what you pay for instability. Yeah, that's been exposed um, in with this Iran war. I'm looking at combinations like Singapore and Malaysia. Just so you know, Singapore looks good because it's no different than the UK or any major Western financial center. It's got that prestige. The tax rate's half of what I pay. The residential is not that tough. If you set up a corporation and you're employed by that corporation based out of Singapore, so that's kind of like what I'm looking at. Dubai is interesting because you can set up visas there. Doesn't mean you have to reside there. You can set up corporations as well, so you don't have to reside there because of the exposure, as you mentioned. Singapore's good, but they're trying to build up better relationships with Malaysia. I don't know if you heard about Malaysia. So I've preferred for both Singapore and Malaysia. They're tax free on foreign income. So if I earn income locally in either country, Malaysia or Singapore, I have to pay 25%, which is low considering what you get in either city of Kuala Lumpur or Singapore. The appealing thing about Malaysia and Kuala Lumpur, it's it's so cheap there. And if you look at um, versus Vietnam or Thailand, look at the government safety status. Malaysia's still a green, so it's still fairly safe. It's obviously Singapore as well, but Vietnam and Thailand are yellow. Another one I've looked into is Panama, Panama City. Panama City is great. I haven't looked in the tax rate for the foreign income. I think it's no foreign income there too. That's another option. And they're on the same par as what you get in a Western or US based city. Medical as well. That's pretty good. And it's much cheaper there as well. So I have looked into that and will hopefully relocate to one of these regions. Dubai, I'm interested in still. Another one, if they're single like me and just want to work, places like dare I say Saudi or Oman in the Middle East, they're still exposed. Hopefully this will get settled out and things will be better. So I it's just I've got my opinions on where things are going with the West. I'm doing here, but I have my opinions. So I'll just leave it at that. And trading futures and options is global, so you're not impacted by that. which is good. Okay, I'm done. I'll do a last round of questions here. If you have them, comments, questions, based upon what I said. Yeah, look into business structures if you still want Western time. You can do it, but it's a tax authority locally that you have to declare yourself and disconnect yourself from that officially. It's not so hard here in Canada, but in the U.S. it's very difficult to do. Apparently, there's a waiting list now, a year to get that process done. They do that on purpose, just so you know. MTM election is good though for the U.S. I've not heard of that MTM election. I should write that down. Look into it. Good to know. Good to know. MTM election. Okay, cool. I appreciate that tip. I'll do a last round of questions or comments as well. Brandon, I encourage you to join my email list at quantlabsnet.com. You get a C++ law infrastructure ebook. You sound like the kind of people we want. Uh, yeah, especially in the group. I like engaging people. Anybody else? JDI. I can't remember the other person that was highly engaging as well. They had a 416 in there as well, in their user ID. So, Alex, I appreciate it. Thank you. 602. If you got any questions or comments, let me know. I'm just going to watch out for my little way I can identify that you got that notification, that you got it. Questions and comments right now, please, please. Thanks all, Quant Labs. I will be back for the C++ is awesome. Thank you. I appreciate that. C++ I don't talk. I did it a few months ago, but it's kind of overkill because of the okay. So we're at that point. I see what I was looking for on YouTube. So I'll do it going once, twice, three times. Uh, so let's do this. Going once, yeah. Wait for that. Going once. Yeah, C++ I don't do a lot because the account size of Python's better for what I'm doing. Going once, going twice, two right there. Going twice. Yep, there's my first one. Going twice. I'm waiting for my two, and I'll do a three, and we'll end it. There'll be three here. So once I see that on my YouTube, we'll end it. It can be, yes, yes. Join us. Labsnet.com. Get on my email list. Waiting for my three, and we'll end it. Yeah, three. Am I just waiting for it? Oh, no, I think we did it. Yes. Okay, we did it. Thank you very much, everybody, for making this a very engaging stream. We'll be back Tuesday night in the regular time, 7 p.m. Central Time here on YouTube, and hopefully I'll add some platforms. But again, the engagement will be here on YouTube because it's the number one platform for it. Thank you very much.